Perfect. Thank you. So like I was asking, man, um, I think most of us, we had a good week this week. Um, the market was, the market gave us what it gave us and we took it gladly. Um, which doesn't always happen. I think sometimes we mess up, but we're able to do what we needed to do this week. So I'm proud of us as a group and what we're able to achieve. Um, However, I think we call this a Q&A session. It's gonna be both. It's gonna, I want to hear from you guys, but at the same time, I'll share one or two things that I know, one of the two things that is currently helping me, and then we could look at some charts. We've got a few things coming up this week, and want to be ready for the market. No surprises. We know the market tries to play us, but like I always say, I want to know what the market's. I mean, I want to anticipate what the market's going to do both ways, and whatever it does, I want to be ready for it. So we'll just look at those as well. Usually I prepare some slides. I was preparing one and I was like, now I'll leave that one for now, and we'll talk about it, and then later I could put out a slide or something. I don't want to take away from what we're trying to do here. So let's start with something. Who made money this week? Can you just put one in the chats? Let me see. Who made more money this week than the lost? Okay, nice. If you lost more money this week than you made, can you put two in the charts? Anyone? Okay, perfect. Fiona and crypto. Okay, good. Fiona, do you want to jump on the mic? And okay, we've got a couple. Let's start with Fiona. Are you there? Can you jump on the mic? Okay, she can't figure out my mic. It should be on the left hand side of your screen if you're on your laptop, and if you're on your phone, it should be. I'm not too sure. While we're waiting for Fiona, let's crypto. You tell us why do you think you lost some? Why do you think you lost some money this week?
Cause I'm working with my own brain, man. If I had the T-Money brain, I definitely would be up.
Nah, man.
But look, I'm about to join from my computer and get off this phone. So I'm gonna tap right back in.
Okay. All right. And Fiona says she lost money on a call that held too long. Okay. Okay. I'm just reading some of the responses. I wish Fiona could figure out her mic because I want to hear from her. What made you hold on too long, Fiona? Can you let us know if you figured out your mic? But while you're typing, let's look at we'll go to the next person while Fiona is doing that. Samina, I know you know how to figure out your mic, Samina. So tell us, why do you think you lost some money this week?
She put it back on mute.
Can you hear me?
Yeah, I hear you now.
Okay. So I have a problem with either holding on too long or cutting it too fast. I mean, okay, so I don't know when to cut and I don't know when to hold on. So it's like times where I hold on, it drops even further. And then it seems like the ones that I cut that have dropped, once I cut them, they go up. So I don't know when to hold and when to cut, pretty much. I know how to read the resistance. I know how to read the charts and everything. But it's like I just have bad luck with either holding too long or cutting too fast.
Okay, that's fair.
And I look at the charts. I do the resistant lines, support lines, all that stuff. But it's like for me, as soon as I cut something, it seems to want to run up. And then when I hold too long, it continues to drop to where I'm just, once it gets to 70, 80%, you might as well hold on to it.
Fair enough. True. True. Okay, that's a fair one, and we'll address that as well. And I'll tell you something, Samina. What you just described, even the most experienced traders still suffer with that. So it's not personal to you at all. It's something that a lot of folks still deal with. I still suffer from that. Let me be honest with you. And I'll tell you what, yes, I'm not as bad as I used to be, but I still suffer from that. But we'll talk about it a little bit more. Let's go to RW. Why do you think you lost the money this week? RW, are you there? Oh, Dr. West in the building. I didn't know it was you. You're on mute, though. You're on mute. I can hear you. You're on mute. You're on mute. Okay. And everyone, this is my man. This is Dr.
Sorry
West.
about the back.
Yeah. Yes, sir.
Since my brother's baby shower, but
Oh,
yeah, I lost on an Apple stock this week. I got hyped up about the price target, and it just didn't go anywhere. So that was it.
okay. So you lost out on Apple this week because you saw the price target and you played the price target, right? Okay, that's fair. We'll address that. And you're not the only person, because every morning, we see these price targets that come out and people get hyped by it, right? We hear that this stock the price target for this stock has gone from 300 to 350, and people just play that. That happens. People lose money.
Can I ask a quick question about Apple, real quick?
Yeah, okay, go on.
No, because it's been running up, so that's one of the reasons. Like I looked for the last 8 weeks, like before we got in, I looked, and it's been running up. It ran up $20 for the last 8 weeks.
Yeah.
My question was, is it because of earnings? Because if you look at the daily, it looks like it formed like a small cup and handle, but they do have earnings on the 27th. So is that the reason why it's running up, or should I hold true to that cup? Because it formed a cup. It's a small cup, but it's a little cup on the daily.
Let me take that note down. I don't have a writing pad here, so let me just write Apple down, because I want us to look at that as well, since you've mentioned it. So we'll talk about it, and you'll see why how I trade Apple.
Okay.
Right. Sure. I'll show you how I trade. How I trade every stock, Apple especially, but I'll show you how I trade every stock. But we'll talk about that. I just want to go through, some of the reasons we're losing, because now you said you lost on Apple. It's been running, but it didn't run on Friday, so we'll lost some money. We'll talk about it. So let me just run through the list, and then we'll come back. Fiona, have you sorted out your mic yet? And I think multi-service said if you're on the phone, tap the screen and the mic on the bottom left. So while she's doing that, I see Coca, Jay, you're saying that, they have the same problem, I think, of holding too long and all. All right, that makes sense. So
Tap in real quick, T.
Oh, all right. Good. Quick one. Quick one.
So I think essentially everybody's situation is gonna be different. For me, I'm almost like you might as well call me multi-service too. Because I got so many things going on, and it's like I try to allocate time for the stock market, try to allocate time for my other businesses, for my children, for my health, all that kind of stuff. So for me, it's like when I like when I sit in a group, when I sit back and I watch all these plays y'all put out, and it's like, I ain't trading today, I ain't trading today, and I ain't trading today. I think I get more FOMO, because it's like damn, it's like all these bullets in the clip, you know, all these bullets in the clip.
Yeah.
And it's out there. It's like, all right, you know what? Let me just get into one. Let me just tap into one. Like this week, yesterday, I said, fuck it, let me get into one. I got into the BA. As soon as I got in, down. I'm like, what the hell? I just sat back and watched all these plays be thrown out. And then the one that I get in
Goes down.
it goes down. Even like about 2 weeks ago, which would made me stop trading for a minute. And it was like I got into, I think you had called out like 7 or 8 plays. And I had set, I set I set market buys, right? For that Monday. I got filled on 3 of them. And I don't know if I held them too long or what, or none of them went the way I needed them to go. So for me, I like I say, it's like I really want to get to know the key things to look at as far as when it comes to this option stuff.
All right, okay, that makes sense. And I think that's one of the few things we'll look at as well. I think the other thing I want to ask you guys is, and everyone, you can either jump on the mic and say it, or you can type it in the chat. What indicators do you guys have on your charts at all time? What are the 2 or 3 indicators that you always have to have on your chart, regardless of, do you have any specific indicators? Some guys use MACD, some guys use moving averages, some guys use RSI. What are the 2 or 3 indicators that you always have on all your charts at all time? Can you guys just type it in the charts?
Hey, T, you mind if I say a couple things real quick?
Oh, sure.
So I just want to make sure that all of us are on the same page. From what I gather and what I've seen in the chat and here, is just for most everybody, it's either holding on to your loser too long. And I just want to make sure that this is kind of, the overall, so we've got an idea of how we can help better. But either holding on to your losers too long, cutting your winners too quick, maybe not being in the right expiration or maybe the right strike. Is that kind of, the general feel? Because that's the general feel I get when I talk to people. I just want to make sure that, between T, S, Huey, and I, that we kind of have an idea, and this is why T's, hosting this, is that we have an idea of where we can help you guys out best. So if we can summarize it into maybe those 4 or those 3 or 4 things, would that be an accurate statement for everybody here?
I think that's fair. Perfect.
Okay. Perfect. Thank you.
So
I like the synopsis of that. This is Carrie. Hi, y'all. And just for me, I really want the setup. Like you always say, no setup, no trade. Like what exactly is the setup that we really want to see? Like above the 200, it's riding on the 50. Like I need what I should be seeing on the chart to say, okay, this is looking good. Like what's that, the setup.
Okay, perfect. And I'm glad you asked that question, Kerry, because it links to this question I just asked now, right? The first thing I'll say is, you see how everyone has different criteria or different indicators that they have on their screen. Do you guys know the funny thing about that? Everyone's right. There is no one single pattern of trade. I mean, there is no 100% one pattern of trade that is 100% right. Every single thing here could make you successful. That's the sincere truth. I could tell you, I use TTM squeeze and I use MACD. Somebody could say they trade only on RSI and MACD. Somebody could say they always have the 20, 21 EMA. Every single pattern is right. There is no one single pattern that is better than the other. The issue is, how do you interpret the information that pattern gives to you? That's the very funny thing. Step 1. Step 2, what kind of trade are you trying to do? Right? Are you are you doing a scalp? Are you doing a day trade? Are you doing a swing? That also determines what kind of trade. So sometimes you guys could see me on one chart. I have some indicators. When we start talking about something else, I change some of those indicators. I change indicators to some maybe another time frame or something. And you guys are like, why am I moving from one or the other? It's because I'm trying to get the right indicator for the right thing I'm looking for. When I'm scalping, you guys could see I'm looking at different things. When I'm looking for a trade that goes into next week, completely different thing I'm looking for as well. So there's no indicator, lagging, whatever you want to call it. We talk about all kinds of stuff. We talk about levels. We talk about, really fancy stuff. We could go, it's beautiful when you're reading out all these things. It sounds great. It sounds amazing. But it's all the same, it all boils down to how do you interpret it. So to your point, Kerry, setup. The question is setup based on what? Are you looking for a setup for a daily swing, for a scalp, for a trade? What's the setup you're looking for? Also, how long are you looking to be in that trade? Several questions, we ask ourselves. So for me, lots of people swear by RSI and MACD, and it makes them successful. So for me, the first thing I'll say is, why would I even want to change? Why would I even want you to change what makes you successful? Why would I want you to change trading with RSI and MACD if that makes you successful? For me, my idea would be, let's use your RSI and MACD more often so that you can get familiar with it. You can know its strengths, you can know its weaknesses, you can start identifying it, you can start, understanding how it works so that you can become better. So while someone else might be using 21-day EME and, you know, whatever, TTM, MACD, whatever, if yours is another style, perfect. If, because I'm seeing 5 and 9 EMA by um, Y Mills, I could see the, my man says 50, 200 VWAP, and Bollinger Bands. If that works for him, perfect. Each of them can be interpreted different way. I've tried almost everything here. I've seen the 5, the 9, the 20, the 50, the 50 EMA, the 200. I think that's a lot. Personally, Y Mills, I think it starts confusing you once you have all these indicators on your screen. That's getting you really confused because how do you interpret each and every one of them? So I would limit it somewhat, but
I let me just answer that real quick because I use them. I learned that you can use each of these levels as each of them as levels, right?
yep.
So that's because I had that same problem with like Samina about having. Hold on one second. Hold on.
Sure.
Sorry about that.
No, no
So
worries.
yeah, I use these as levels, right? So my 5 and 9 EMA, they're like my real go-to because from what I've been going through a lot of losing these last couple months, and I had to retool, get back to my video and teaching, and I found that the 5 and 9 EMA are like really good at predicting, the shift change in the trend. So when they cross each other up and when they cross each other down, there's like a lot of times there's going to be like a red or a green candle following however they cross. And then from there, like I said, I've been having the same problem with Samina about, finding levels. So when they go like to the 20 EMA, like if the 5 and 9 EMA cross down or cross up the 20 EMA, I know something's about to happen. That's something. And then I look for like the 50 MA or the 200 MA or the 100 MA for the next level, the VWAP for another level. So that helps me out as in using it for support and resistance.
Okay.
And I also draw my own lines of support and resistance, but that also helps me out to like, okay, this is about to go because the 5 and 9 cross, that's a number one, that's a signal that's already like, okay, something's about to happen. Because as soon as those cross, a lot of the time, it might be a fake out, I ain't gonna lie, it faked me out a couple times.
Hmm.
But a lot of the times, especially on the 1 minute, I know a lot of people don't trade on that. But that gives me also the daily trend. So by the time it hits like 12 or 1 o'clock and you're looking at the 1 minute spaced out, you can look at exactly how the whole day's trend is going. And then you can follow like if you draw a trend line like going sideways from there
Yeah.
up and down depending on how it goes. That's why I use all of that. But my real key is really the 5 and 9 EMA.
And the 9. Okay. So, and I think what Wymil's just explained now is how he interprets it for himself, right? And that's what I'm saying, that I might not be using that, but he uses that and it works for him and he gets it. The more he uses that, the more he familiarizes himself with it, the more he creates an advantage for himself as a trader that sticks to that 5 and 9. That's key because you'll meet 500 traders and they all trade in 5 different ways, 500 different ways. That's trading. People talk about objectivity. I'm a huge believer in objectivity, but at the same time, there's no 100% objectivity. There's still a whole lot of subjectivity to trading. You and I could see the same thing. My indicator could tell me one thing that's going up. Your set of indicator could tell you this is going down. It's how we interpret it. That interpretation is it's subjective, right? It's how I see it. But because of I am using my own set of indicators, even if I fail, I'm like, okay, the next time this showed me this, maybe and it went down, maybe the next time it goes up. For someone else who used a different indicator and it worked for him, is like, maybe this worked for me the last time. Let me try it again the next time. If it works a second time, he starts believing more in that set of indicators. So for me, it's about creating, getting familiar and getting comfortable with your indicators or whatever it is you have on your screen and sticking to that, right? That's the way I interpret it. And that's the way I think trading should be. Because if you come to me to teach you certain things, I might teach you what I know and what I'm comfortable with, but you go back and you're like, this doesn't really, I don't enjoy this whole thing. Or I prefer, like I said, the 5 and the 9 and all the rest. And you stick with that and it works for you. I'm seeing Jay Huss here. He says he uses the 9 and 21 for the 1 hour. So 1 hour for day trades and scalps, 20, 50, 200 for
Sorry, I meant the 1 minute to 1 hour.
Oh, 1 minute to 1 hour. Okay, 1 minute to 1 hour
Yeah,
for
like
day
day,
trades.
intraday scalps or day
Okay,
trades.
for scalps. So
I got a question about that.
Oh, go on.
So, okay, let's say when you looking at, let's just say you pull up Facebook, and when you pull up Facebook, you're like, okay, well, first of all, I don't know how you got yours set up, like, because I'm quite sure you got like a watch list.
Yeah, every trader should have a watch list of favorite stocks to like.
Right. So
you shouldn't be guessing. You should have 5 to 10 stocks that you know that you always want to look at because you like them.
Right. So when you pull up a stock, right, you're like, okay, let me look at Facebook. Now when you pull up Facebook, you're like, okay, which way am I looking at this? Am I looking at it to day trade? Am I looking at it as weekly, or am I looking at it as something 2-3 weeks out? So when you decide how you want to look at it, is that how you decide how you chart it? Because you can chart it on.
Okay. Now let me address that. Let me address that point, and this is important for everyone here. When I say trading is personal, it's 100% personal. I could tell you every single thing I do, but guess what? That's how I do it. Some people swear that they're never going to let a trade remain open, right? Some people say every day they're going to close that trade, green or red. They're going to close that trade and open it again the next day. Day traders. Based on that, they decide what kind of play they want to take, right? Because they know that they're looking to get in and get out at that day. Some of those guys will probably take either in the money or at the money plays because they don't want to, they're hoping to just run it up a little bit, get their profits and get out. Or even if it opens up, They're hoping to see how far it goes. And by 3:30 p.m., 3:30 Eastern time or 3:35 Eastern, 3:45 Eastern time, they close it until we're done for today. The way the kind of plays that they would take would be different from me if I'm saying, I think this thing could go. I think, I'm looking at this play, I'm looking at the chart, and the chart is telling me that this thing could go up. So why don't I just take a strike that is further out and buy a contract for next week? Because I think by next week, it should be at so place. That's another trader saying, I like this kind of plays. I don't just want to be opening and closing every day. Whereas you've got people that come in and say, I'm going to come in today. I'll buy 100 contracts, maybe chip contract or whatever. I'll run it up. I'll sell 90 at the end of the day, and I'll have 10 open that I'll let run. And I'll let that just keep running. But all my profits I really want to make, I've made it on those 90 or whatever, and I'm out. Scalpers slash swing traders, they swing their runners, and they scalp their main plays. So for me, it's personal. How do you want to trade? What kind of person are you? What's your lifestyle? Does your job allow you certain things? Does your job allow you to sit down for an hour, trade for an hour, and close the books to say, I'm done for today? Your lifestyle, does it allow you to do that? Or are you the kind of person that wants to set things up, watch it maybe 30 minutes every day, but you don't want to close it that day. You want to see how far it goes for a period of time. What's your lifestyle? Who are you? What works best for you? We've seen people go from day trading to becoming swing traders, and then after a while they're like, yo, swing trading has its advantages, but it has its disadvantages. I'm better doing day trade. Some folks are like, I just don't want to day trade. I want to scalp. I want to trade, buy a stock for 10 minutes and get out. We see all that. None is right, none is wrong. It's just a preference that is based off on you, your lifestyle, what you're comfortable with, right? All that now leads to, what do you look for in a setup, which is a different conversation altogether, and which we'll look at, right? So as much as people look for the formula, there is no formula, right? It's who are you? What kind of person are you? What kind of trades do you like to see? And then what is the chart saying to you? And that last part is important, because one of the mistakes that we make is that we force what we want to see on the chart rather than what the chart is telling us. We force it. We're saying, it looks like it wants to go up. It's going to go up. Oh, this thing's going to run. It's going to look, we're forcing it, whereas the chart is not telling us any of that yet. So the question now becomes, how do we know what the chart is saying to us? And I'll show you guys that as well. So there are steps here, but it all starts with step one is you, because I'll tell you the truth. Chart trading is probably 10 to 20% charts and analysis, 80% psychological and emotional. 80% psychological and emotional. So the best traders on earth, if you guys check them out, most of the things that they post about books, they are never posting books about, they hardly post about books about trading or charts. They're posting books about emotional intelligence, mindset, controlling yourself, controlling your emotions, controlling how you react to stuff, controlling, notice, just go online, look at the best traders that have made the most money on earth and see the kind of things that they publicize. They hardly post about the books itself, about trading itself. They're talking more about emotional intelligence, emotional coefficient, not reacting, being calm, trading under stress, trading under pressure, things like that. So when you start understanding that, you realize that trading is really about you as a person. The charts and everything is great. The patterns are beautiful to know. I started with one pattern, everybody started calling me the cup and handle guy. But I'm like, yeah, that's great. I could trade cup and handle all along. But what about if there's no cup and handle on my chart? What do I do? I still want to be able to make money. I start understanding other patterns. So patterns are great, but all those things are meant to support me. They're meant to support what I see, who I am, what I believe in. And the good thing about that is, in the past, I used to be scared of calling out plays for people because I'm like, if I call out the plan, it doesn't go. What happens? These guys are gonna call me a fraud, or they're gonna say, "Oh, T-Money made me lose money or something." I've been called certain things. You guys know, some of you know already. I've been called certain things because you take 10 plays and 3 don't go well, and they kill you, but 7 went well. But but the 3 that don't go well are the ones that remembered. But it comes with the terrain. I put myself out there as someone that's gonna call plays, so I expect that people are gonna say some of these things. So when all those things were there, initially was messing with my head. But eventually I got to a point, I'm like, you know what? I hit, I miss, it tanks, it goes up. The issue is I did something I believed in. I had a formula I'm following. It works, it didn't work. I'm gonna keep refining this formula until I increase my hit rate. So I might have started at 40%. I'm moving to 50, 60, 70%. I'm never going to be 100%. Nobody's 100%. But I'm making sure that the kind of plays I'm calling out today, based off on the fact I'm refining what I'm doing, even if it's a 1% increase in accuracy, it's going to be better than what it was yesterday or the week before. So for me, that consistency, that, using the same thing, and I can assure you, if you look at I'm seeing some great names here. I don't want to call them out so that I don't put pressure on them, but there are some traders here that make a killing every day. If you go to them, it's the same thing. They're using rinse and repeat. It hits, it misses, they're fine. They keep doing the same thing. They just keep trying to fine tune 1 or 2 little bits, right? 1 or 2 little bits, and that's all that they're doing. But it's the same thing. It's about, getting better at what you're doing and trying to improve on it. Otherwise, you're going to be that person that you talk to me, I tell you what I'm looking at. You change your strategy to mine. So right now, those are like some of the key things that you start looking at. So if I'll open up a chart and then we'll start seeing some of the things that makes us make some of the mistakes that we make, right? Samina's point, holding on too long, getting out. I mean, you get holding on too long or getting out too early. People, people cutting winners, instead of holding on to winners because of their panicked. And it goes back to what I was saying about psychology. A lot of times the reactions we're making today is because of some of the losses we've taken in the past. So someone is like, let me just take my 10% because I lost 20% the last time. But that trade might be willing to go 300%. Some of the numbers we pulled this week, some people don't get those numbers in a year. And most of you have been in other trading groups. So you can confirm it or push back. But some of the numbers that we got just this week, some groups never see that in a year. We're having people that were, some place CMG went to almost 8,000%. Starbucks was it? Starbucks went some crazy, I think like 1,300, 1,289%, 1,289,000, I mean 1,289%. We had numbers, we had crazy numbers this week. Imagine if because of you were scared, you cut some of those runs at 10%, at 15%. Profit is profit. We say that all the time, but you should also you're not, even though you're going to be happy you made some profit, there's no way on earth you'll be happy that you took out 10% and the trade went to 1,300. There's no way on earth, there's no human being that's going to be happy about that. So how do we mitigate some of those bits?
Can I ask a question just on what you're saying, T-Money?
Sure.
Because I go back and forth. Y'all know me. Sometimes I hold too long, it goes to 0. Sometimes I cut too quick, it went crazy. I just don't know when to do it. Okay, like last week I was in that wish one, right?
Mm-hmm.
That I ended up holding it until it went to 0. You know what I mean?
Okay.
I could have said, okay, let me see, maybe it's gonna, but this is what I'm saying. So that was one that I held on to. It didn't come back, it went to 0. Sometimes I cut it, I'm like, all right, forget it, I'm gonna cut it, and then it runs the next day or the next week or whatever. So it's just like, I still don't have anything that says, should I cut it, should I hold it, unless I'm just gonna go on percentages.
Okay, so the fact you even mentioned that last point tells me you know what you should do. that last statement you just made tells me you know what to do. The problem is that you do it because you just talked about percentages now, which tells me that before you jump into any trade, you know that you should have an amount that you're looking to get out from this trade, right? That amount could be is a percent, it should be a percentage amount. It should be every trade I take, I'm looking to get 10%, 15%, 20%. Whatever that number is, that's something that you should be able to decide by yourself. When people ask me, should I get out of a trade, be it a running trade or a losing trade, I try not to give answers because I'm like, what do you want to do? What was your decision before you took that trade? What was your decision? Most of you were on with me yesterday when we were, I think I was, most of you were there when we were looking at Amazon. And we're talking about Amazon. And the moment Amazon hit 100%, I told everyone on the mic, I'm getting out. I've got what I came here to get. And I took my Amazon and I left. 100% straight up. There was no negotiation. I took my 100% from Amazon yesterday and I built. Some other person would have gotten out at 70% because they're like, that's all I want. Some will say, Amazon gave me 20%, I'm taking it. On a Friday, I'm out. It's all personal. Whereas some other people will say, this is Amazon. Amazon should run. It'll probably give me 150%. You could get burnt, it might get there, it might not get there, but that was a decision you made. The question now becomes, did you learn from it? And did you decide that maybe you rather take at a certain percentage and then maybe leave a runner to see how far that runner goes? Because I know I wasn't going to call names, but let me use Fab for example. And most of us see how Fab is doing, she's killing it in the game, but she's not doing anything out of this world. Fab gets into a trade, she takes her profit and she leaves a runner. If that runner goes to 1000%, she tells you my runner is at 1000%. But before she's talking about a runner, she has already taken her profit. She's already taken what she puts in that investment and she's out of it. She's not leaving the runner, which is house money. Fab, do you want to jump in and just add something, or am I misquoting you?
I got a question real quick, T-Money.
Hold on, just before you go, I want Fab to either respond. Fab, can you hear me? Okay, maybe she's not able to speak. And I can't see a comment from, oh, she said, sorry. Hold on, let me see what she says. Okay. If you can speak, Fab, that would be great. If you can't speak, just type your response.
Remember, she's on vacation and has
okay.
bad Wi-Fi and stuff. So
yeah, I just saw it. Okay, yeah, Fab, I was saying what you do, it sounds like it's rocket science, but it's not. You basically get into a trade, you see your profit, you take your profit and you leave a runner to keep running up, right? If that runner goes to zero, so be it. If the runner goes to 10,000%, so be it. But you've already taken your profit, right? You've already taken your investment. You've taken out your investment, maybe some profits as well, but what you leave is your runner. Is that a fair analysis?
Can you guys hear me?
Yes, we can.
Okay, I was saying something. So yes, that's partially correct, except for on my runners, I don't let them go to zero. Usually, usually if I like, I'll say a certain amount, like if I'm up 500%, I'll say like if it drops to my profit drops to like close to 200%, I'm gonna go ahead and take my money out. I don't wait to see if it's gonna go back up, but I don't let the runners go to zero. But everything else you say, yes, that's correct.
Perfect. And you guys, you see, why I wanted that to speak was someone else would say, if it's 500 and it goes to 400, I'm out. Someone would say, if it's 500 and it goes to 100, I'm out. That's where it's personal to you. You have to decide what you want, because step one was taking out what you invested in it, right? Step one was taking out your investment, young Fab. You got 100. If it gets to 100%, you've taken it out and
Correct.
you leave your runners. So it's one of those things that, and someone will say, you know what? I don't even want to leave a runner behind. I'm just going to take everything and get out. It's all personal to you. So it's very hard for someone to tell you, this is how much you should take up from your trade. Because if it's a trade that I need $20 from it, I'm just going to get $20 and that's fine. Someone else would say, nah, this trade can give me $50. I think I could get it. Let me see. If it doesn't give you $50 now, you're like, okay, maybe next time I'll see what I can get from it. But you learn from it, So it's very um personal. Now to taking losses, that should be a no-brainer. That should be a no-brainer because, and this is where we all have to get better. Think about it, you have $100. It goes to, you lose 20%. It goes to 80. You have to decide, is it best I cut it so that I still have 80 to play again to see if I can make it, I can make that 20 I lost? Or do I want to let it go all the way to 10 with the hope that, am I going to keep watching it until it goes all the way to 10? Because we talk about risk and rewards. Basically, that means how much are you willing to lose to make a certain amount? A 3-for-1 means I am willing to lose, for example, $10 to be able to make $30. So if you're buying a contract for 20%, for $20, for example, it's basically saying I'm willing to lose this $20 so that I can make $60. That's a decision you have to make. It's a risk, but it's a decision that you have to make. So if you're not comfortable with losing all that, like Kerry, and this is to your point, then you'll say, okay, I've got $20 in this contract. The most I can lose is $5. That's a 25% stop loss, right? That's a 25% stop loss. So you set up your stop loss. It goes to $15. You sell it and you're like, fine, I'm out. I'll look for another play to get in. That way, you're not losing all your money on one play and then unable to get into another play. But when you secure some of that money, it allows you to try another play to see if, because there's nobody that's going to tell you that every play that they call out is going to be 100% hit rate. It's impossible. It's 100% impossible. So sometimes, like Crypto was saying, maybe the one it got in was the wrong one. You see it dropping out, get out of it. You see it dropping to 10%, 20%, get out of it. But that's not my job to tell you how much you should be willing to lose. It's
So
not my job.
Can I add to that real quick? 1 second.
Yeah,
Sorry
sure.
about that, guys. I just want to say, like, I understand what T Money's saying too, but there's also another strategy that I've started to practice, and that's retooling. So, like y'all said, maybe you hold on to the play too long, and then it drops, and then or if you cut it too early, and then it goes back up. My thing is, I've learned to never forget that play. So, because T Money, like he says, that not everybody's perfect. Not all the time they're gonna give you the exact perfect entry, but it might still be a really good play. So a lot of the weeklies T Money be calling, I'm like, man, let me just wait to see if it'll dip some more, because sometimes it'll dip. And even if I jump into the play, I won't, like you said, create your stop loss, take your money, and then just still watch the play. Because then, in the next day, you can see, okay, this is the reversal I was looking for. So I'm going to jump right back into the play. So that's why sometimes I'm in the chat and I'm asking T, you think this would be a good play to jump back in? Because like I said, I've been to a lot of Discord groups, and I've seen they're going to be the plays that run, but not all the entries are perfect entries.
Yep.
You know what I'm saying?
Yep. And to that point, and I'm glad you mentioned that point. You guys most people forget stuff. When we put out some of these plays, we call them weekly watch list.
Right.
Not daily watch list, not hourly watch list, weekly watch list. A play might run on Monday. That's another play might pull back on Monday, but make a move on Wednesday. Those plays we call out are the ones we're watching for the entire week. That's not to say by Wednesday, another play might not pop up and we call out that other play or something. No, this just allows us this just gives us a set of plays that we want to keep on our watch list for that week, on our screen for that week. I showed you guys yesterday when we're on the screen. I said the same charts I opened on Monday are the same charts that were open up until Friday. So I didn't shut down my laptop, which made it slow and all the rest. by yesterday a little bit, but it's because I had the same stuff on my screen. I didn't take it out. I'm like, these were the things I looked at on Sunday for my watch list. These were the ones I opened up on Monday. I will get in and get out of this place as the opportunity arises. So a play that you got in and pulled back 10%, maybe it pulled back to the right support now and is now willing to move up. So let's say I called out a play for 115 and it was at 112. And rather than going to 115, it pulled back to 110 and I lost 20%, for example. I caught it, I caught it and I wait. My new entry might be 111 and my new price target might be 113 based off on that move that happened now. Now I get into a new contract for 113 with my entry being at 111. Still the same play. I'm not holding on to that 115 because now that 115 has becoming invalidated. So now I'm doing the 111. I'm getting in at 111 with my strike at 113. Still the same ticker. So I'm not changing ticker. I'm just changing my strike, my approach. I think there was one day that I put out a play. And in the morning, I put out a call. In the morning, I put out a call. And in the afternoon, I put out a put. And some people were going crazy. And I'm like, see, I'm just trading price action. This is straight technical analysis. It showed me it was going to move up in the morning, and it did. Now it's telling me it's coming back down. The same ticker, 2 movements in the same day, 2 opportunities to make money. So if I'd taken the puts in the morning and it went up as a call, I would have lost money. If I ran up as a call in the afternoon and it went down, I would have lost money. So I had to wait to say, okay, which direction was it going? And when it went up one direction, I took the call. When it started coming down, I took the put, the same direction. But if you hold it to say T-Money called the call, and even if it's going down, I'm still going to hold it because it's a call, but it has met your 20% stop loss, your 30% stop loss, your 40% stop loss. How then do how can I help you in that situation? Because at the end of the day, I don't know your pocket. I might be able to absorb a 10% or a 40% stop loss. Can you absorb a 40% stop loss? You might be able to absorb a 100% stop loss. I might not be able to absorb a 100% stop loss. 100% loss rather. So how then do you then how then does it become a personal thing to you? How then do you then make your personal decisions by yourself?
So,
because, go on.
So to add to what you're saying, I think, so in my head, I hear a lot about mitigating risk. And I think mitigating risk comes with you knowing, first of all, knowing yourself and what you can afford to lose, so on and so forth. So when you get into a trade and you don't know how to look at the chart to see which way, like for instance, what you said, you may put out a play that was a, you get in at 115, then, everything that you was looking at is like, hey, this is a good point. But the chart and the stock was like, no, it pulled back, and you say, no, okay, I'm gonna exit out of that. I'm already okay with losing my 5 or 10%, but I'm gonna re-enter that trade and say, hey, now the new entry point is 111 and it's set to go to 113. Mm-hmm. So from my perspective, it's like, okay, I want to figure out how to find those kind of or know what to look at when I'm looking at a chart. Not to say like, oh, okay, I want to copy what you're doing, but just to train my eyes to look at those kind of things. And I think that's what I think Carrie was kind of talking about.
All right,
let me having that vision.
Okay, let me show you. And I know we've used the first hour. Are you guys okay to just hang with me for another hour so that instead of 90 minutes, we do it 2 hours? Are you guys cool with that?
Man, listen, we here all day, man. I'm here all day.
Yeah, the knowledge, we out here, man.
And T-Money, real quick.
Sure.
Okay, so everybody doesn't have a large account to keep pulling money out, pulling money in if it drops. So say I could afford to lose 10%. If I'm losing most time, nine times out of 10, stocks are gonna, as soon as we get in, stocks are gonna drop. Either, I mean, whether it's 5, 10%, 20%, they're gonna drop and then move back up. So if
Not
I'm
really.
saying if I'm saying I can only lose 10, 20%, and then I'm pulling money out, and then as soon as I pull my 20% out, it runs back up. Like I feel like losing 10% every day, 20% every day, like that's throwing away money too.
That's I think that's where, and I'm not, don't take this the wrong way. I really don't want you to think this the wrong way. I think that's where the mentality of trading comes in. I mean, of you as a person to say, we talked about risk reward, right? How much do you think how much are you okay with it going down by for it to make the move you think it's going to make? You just said something, you get in, it pulls back, and then it goes back up. If you already know that, then why do you want to set your stop loss at that point that it's going to drop before it goes back? Because what you just did here was a straight up analysis. I don't even know if you understood it, but you just analyzed the play 100% now to say it drops maybe 10%, 20%, and then it runs back up. So if you know that already, why not set your stop loss at 25%? Because you know it could drop back and then go back up. Also, how are you making your decisions of where your stop loss should be? Because that also determines what you should be looking at. Now, let me pull up a chart because I know we've been talking, but I think now I want us to go into a real chart. Let's start looking at what some of the things we should be seeing, right? Or we should be looking at. So that way you answer some of these questions that you guys have.
Now, don't that what she said, doesn't that play into you actually looking at the play, looking at the chart? Because I feel exactly what she's saying. Because it's like, all right, when you call out a play, if I'm not looking at the chart and I trust everything that you put out, whether it be good or bad. At the end of the day, I know that I'm like, okay, anything that I put in here, I have to be okay with losing it all.
But that's the funny thing about trading. It's I said that, yeah, you have to be okay with losing it all, but you don't have to lose it all.
Right.
Does that make sense? You have to be okay with losing it all because trading is basically you putting out, it's almost like you put out money in the air and you're hoping it goes and fetches you returns. The fact the moment you put it out, it's no more in your control. It's out there now. You've put it out in the universe. You're hoping that it goes there and brings you returns. What we do is saying, what are the best chances of it coming back with those returns for me? Because no one on earth, I'm telling you the truth, no one on earth can predict what a stock does. We can only use, like, technical analysis uses information that's happened in the past, but what you're seeing in front of you to anticipate or predict or to assume what's going to happen in the future. Fundamental analysis uses all the other information, market price, this and that, to say, okay, maybe all these things will push it up. But nobody can stand up and 100% tell you this is what price will do. So all I'm doing is giving myself the best chance to make money from a play by doing all this analysis. I could do all those things and it could still tell me, nah, not today. And I'm still going to lose. However, when that's happening, it becomes an issue of, okay, so how much do I think I'm comfortable risking for me to make that money? Because the mentality of a profitable trader, and this is where it's a little bit reversed, is how much can I lose to make what I think I'm going to make? Not how much can I make to lose this amount. It's how much can I lose to make this amount I'm trying to make. So if I'm putting $20 in, how much can I lose for $20 in that $20 to make $50? That's a decision that you have to make yourself as an individual. How much can I lose? How much can I go to sleep? Like, how much am I going to put out there that is not going to give me a heart attack? We see people put some trades in. We see some people take some trades and they're unable to sleep because they're like, oh my God, I hope that shit tomorrow, I hope it doesn't, because if it goes down, they're done. So for me, I'm like, why do you want to take a trade like that that's scaring you the fuck that you can't even sleep? you know, what kind of trades do you want to take that you're hoping that you're so scared that if something goes the wrong way, your account is done for? You should never take a trade like that that scares you that much, or that, you know, you should at least have measures in place to say, on a trade, like for example, if you're taking an Amazon call and you're spending 1,600 on Amazon or 30 something hundred or whatever, there's no way you should not have a stop loss on a play like that. 10-20% stop loss, whatever that is, because you're going to be restless. You're going to be restless that 3 grand, I have 3 grand on the market or whatever. So if you're not setting a stop loss for Amazon, you should be thinking, I'm putting 3 grand on Amazon or 1,500 or 1,800. I'm not willing to lose more than 250 to make 1K or 2K on Amazon, whatever that is. You're like, I'm not willing to lose more than 250. And if Amazon goes down by 250, I'm fine. I'm getting out. It's fine. It was okay. But that should be your mentality first, not where is this thing going to go? Because we're so focused on price target. And price target is great, but price target is secondary. Your primary is, how much am I losing? How much can I lose? Right? How much can I lose? So to Samina, you move a lot around the day. That means your best friend should be stop loss. You don't have to look at the chart. Your best friend should be stop loss. The whole of this week, all I did was I set limits on every chart I was looking at. Wherever I was, it triggered, I decided to get in or get out. It triggered, I decided to, that was all I did. I was not sitting down watching the charts every damn day. No one should do that. That's becoming crazy. That's when you start becoming crazy. You should make the systems you have work for you. Stop loss is automated. Charts, line, all these things are automated. You can set it up and it will tell you, I'm at this point, I've triggered, it's fallen, the line is falling below this. Let me just show you this so that, because I think some of these things will make sense the more we start looking at it on the chart. So just give me 1 minute, guys. Let me pull this up. And
so while you're doing that, T Money, for you, for Young Fab, S Dot, Jake, all of the other ones in here, right?
mm-hmm.
When you guys get into a trade, do you automatically set your stop loss, or do you get into the trade and then set your stop loss? Or your trailing stop loss? Because I know before with me, what was kind of saving me that I kind of got away from was getting into the trade and then going in and setting my trailing stop loss, because once it starts moving, but then also that trailing stop loss to get hit fast because it pulled back a little bit and then it ran up some more. So when you get in the trades, do you automatically have it set to what you want, or do you physically have to go in and set your stop loss?
It's for me, the reason I don't want to answer that question is because it sounds like you already know what you're doing, crypto. You know the right thing to do. That's the reason I'm moving, because everything you're saying, you guys are saying the right thing. You, Samina, everyone is saying the right thing. So it sounds to me like the problem isn't knowing what to do. It's doing what you know. That's the point. It sounds like you're doing, you know what to do. Are you doing what you know you should be doing?
Right, but as far as that aspect goes, setting that stuff, I've gotten a little bit more familiar with it, but I also want to, like I said before, have that vision to look at a chart and be able to gauge how the price action of that chart moves for me to be able to know where should I set my stop loss.
Okay. All right. So let me, I'm sorry, crypto. Let me just run through this so that you guys can see.
Go ahead.
Right? Great. So this is AMD. They've got earnings next week, and I started with this one because most of you know, I said this a lot recently. I played Intel. I expected Intel to run. Intel did not run. Even though they beat earnings, they did everything, Intel did not run. Intel tanked. So I caught Intel. I lost a lot. I lost about 70% or something because I forgot about it. I was focused on all the other major runners I had, NVIDIA, Starbucks, all the other stuff that we're running. I was looking at all those bits and I completely forgot that I had Intel until I looked at it and it was at like 70% down. So I just cut it. I'm like, okay, that's fine. So I took my 30% on Intel. I've added some money and I'm like, that's for AMD now, right? Because to me, I'm like, if Intel drops, who is the likely beneficiary from Intel dropping? It's not certain, but I'm like, based on what I know, who is the likely beneficiary from Intel dropping? And the first thing that came to my mind is
competition,
AMD. So I'm like, okay, let's look at AMD. This is my hourly and this is my daily. Let me make it whole so that you guys can see. I like having it this way, but let me make it whole on the daily so that we can see what I'm saying. This is the daily chart. Great. So this is the Intel chart. I don't need to go that far. This is the Intel chart so far. All right. My chart looks, I wish I could minimize it a little bit, but hold on, let me just, it's a little bit too big for my liking, but, or too small for my liking, but let me do something. Great. So this is Intel from 2021. I'm like, okay, Intel, yeah. Intel was here in February. It dropped down. It's been, and these three things I have on here, this is my 200 MA, this is my 20 MA, and this is my 50 MA. I like having three of them. I change them every now and then, but I like having three of them on my chart. This is just me. Sometimes I change it to EMA. The difference is not too much. So I just stick with anyone. This is it, right? I look at this already. I'm like, okay, fine. This is my MACD, this is my TTM squeeze. I just have them on the screen. But let's look at this before we even talk about anything. For me, the fact, before I look at the chart, the thing that I'm already thinking, like I just told you guys, was Intel messed up. AMD might benefit from it. So I already have that at the back of my mind, which means I'm already biased because I think AMD is going to go up. I'm already biased. However, I am aware of my bias, right? I know that I'm biased because I want it to go up because of Intel. So that being biased is not a bad thing. Being aware of it is key. So I know that already. So I know that some things I might see might be me prejudging the chart, but that's fine. At least I know that, and I've acknowledged that. So I have that on the side. Then I look at the chart, and the first thing I'm like, okay, where are the key levels I'm looking at on this chart? Right? Where are the key things key levels for me? And without making it complicated, I just put lines across places, right? I put a line here. Nothing fancy, nothing, it doesn't have to be crazy, I just put a line here. Oh, why is it not doing? I tell people don't get caught up in, the accuracy and all the other stuff. All that stuff is great, but you've got better things to do than just spending time looking for a perfect line or something. Because it's price, it breaks it, it holds on it, it does whatever, it does all that. I put a line here as well. Right? Yes. All I'm doing is just eyeballing anywhere that stands out, that sticks out to me. Nothing, it's not fancy. It's not how everybody does it, but it works for me. Right? I do this one here. I do one here. Now I put one here. I put one here. I think that's alpha. I put one here. Nothing major. It's just, no, what was this is something I had in the past. I think, yeah, there was one here I was looking at. I could put one here. So Look at this. Okay, great. So just few lines. You can see I put it, it's a lot. Sometimes this is a lot, but I like it on my daily. What this allows me to look at is what it can, which way it could go. It could go up, it could go down. I already have that here. So I'm not reacting. I'm not scared of what it's doing because I already know it could go down here, it could go up here. Now, step two is, because people talk about support and resistance and they're like, oh, we know our support, we know our resistance. Yeah, it's not about knowing it. It's what are you doing with it? Because information is out there. The issue is what do you do with information? How do you interpret the information that is in front of you? Are you using it at all? You know, is it just a line on your chart so that your chart looks beautiful, or it doesn't actually mean something to you? So looking at this one chart here, I'm thinking I've got my 20 here, I've got my 50 here. This is my price. Price currently is here at 92.15. If I click on that candle, you can see that it opened at, I think this was the open at 95, I think closed at 92.15. So it opened here and closed here. I'm like, okay. So when I'm looking at this chart, the first thing I'm looking at is, okay, what trajectory? I like looking at it. What trajectory is price going? So far, price has been going up. So I already like this, that price is going up. It's already obvious to me because you can see higher, 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 higher. It ended here, it ended here. So it's even higher than where it ended the other day. So it's been higher consistently. So I like that in my head. I'm already like, okay, we're on an upward trend, first and foremost. The second thing is, where did price get to the last time that got rejected? This line here, because you can see the wick. It got there and bounced back down. So price was not able to get past this side. So I already have a resistance line here. Clear. I have a support line here because price ended on this line, and you can see it tried to break the line the previous day, it couldn't pass. So this is a support line already. So between here and here, I have one support, one resistance. Simple. The other one, I'm like, okay, where else did price get to and bounce back? Price got down here and bounced back up. So I'm like, okay, so this might be a strong support as well. And I look at it to say, what else has gotten to this point in the past that either bounced back or couldn't hold? And I look at this too. They both touched the line and came back, touched the line and came back. So I know that there's another strong support here. So I've got support here, resistance here. So if I'm taking this trade on Monday, let's say I'm not already in this trade and I want to take this trade on Monday, I'm like, price has tried here before, it couldn't get it. So I'm not going to get in here until price gets over this line. So now, somewhere here, and you can, somewhere here will be my entry, right? Somewhere here will be my entry. And I won't just get in when it crosses it. I'll let it cross it and wait for like two or three more candles to see what happens, because sometimes price could cross over and come back down. Just like you saw here. It crossed over and then pulled back down. So crossing, and this is why I sound like a school teacher sometimes on the trading floor. And I know that because I see a lot of the mistakes that I used to make when I started trading, and I see a lot of us making it. So when you guys hear me talking, I'm posting and I'm at everyone and at everyone and all the rest, it could be annoying. I could sound like a school teacher, but it's because I'm so scared of you guys making some of the same mistakes I made. There's most of us, we've come to this view as if one indicator, one stuff is the ultimate truth. That price crosses the 20 MA or price crosses the VWAP or price crosses something. That's not enough criteria for you to jump into a trade. It's not enough criteria. There should be additional things you look for on the chart itself that also tells you, I have confirmed this thing 2 or 3 more times for me to take this trade. So crossing the 9, crossing the 20, crossing the VWAP alone should not be your criteria. It's when you pull all those things together, how much level of confidence are you getting that what you're doing is right? So what do I mean by that? If price crosses this, I want to see maybe 2 or 3 more candles here, staying above this line. And I want to see it, maybe it comes back to test it. If it tests it and it holds and starts moving back up, then I know I have a trade. Just like you saw here, it came back down here, it tested it here. This was a support line. It crossed it, came back here, and then made the decision, kept going. This here, if I had seen this trade before, I would have gotten in here because it has tested it, it's crossed it, and then it made the decision. Once it opened up here and started going, I'll get in at this point because this is my confirmation that it has held. But if I just, if you just go just because it crosses it once, that might be a fake out. That might be a fake out. That might not be something real. So if I'm taking this trade, I'm getting my entry here on the second or third green candle, and then I'm setting my stop loss. I'm looking at two parts for my stop loss. I'm setting a stop loss. Okay, toast. I'm setting a stop loss somewhere. This is where I ended. I'm setting a stop loss somewhere here and then somewhere here. So I'm going to have 2 areas for stop loss. I'll have here and I'll have here. And then I would decide, if this is going from 91 to 90 bucks. 91.43 to 90.
Johnny says he did awesome.
I then decide, this would be my stop loss here. So I'm like, if it drops to 90.29, am I okay cutting it, or do I want to hold and see if it's going to bounce back up? So for me, these are decisions. Somebody will say, nah, I'm fine. I've lost $10 already. I want to get it. I'm fine. Another person will say, this line was a support line. It bounced here the last time. Let me see if it's going to bounce back up again. Personal decisions. So so this for me is an entry. This for me, this might be maybe 10% stop loss. This might be 10% stop loss, whatever. I use the number and I put that number there and say, okay, at $90 is at 92.15. I'm not willing to lose more than $2 on this play. I mean, I'm not willing for price to drop more than $2. $2 of 2 over 90 times 100 is about 12%. Thereabout. Yeah, is about 12%. So you're like, I'm not willing to lose more than 15% on this play. You lose 15%, you get out. When you see that it goes back into this place and it gets back into this whole zone, you get back in again. That's how I play it. So once I've gotten my entry here, the first thing I'm looking at is, so where are my price targets? This is my first price target here, this one, 93. This is my first price target here. That's 94. I'm looking at 94 because I know there's a resistance here. I know it might try and push it back again and everything, but I expect that, if it goes back, I'll have 94 as my price target. And after that, I'm looking at 95. So I already have my 2 price targets on this chart. Everything I'm looking for is on this chart. My stop loss, my entry, price target 1, price target 2, everything is on here. And I make a decision based on what the chart is doing at that point in time. So when people say, no, how do I know? How? It's all here for you. It's not anywhere else. It's on this chart. It's just at this point you're looking at. It now becomes an issue of, okay, so you've showed me this on the daily. How do I know when to get in how do I know when to get into the play itself? That then brings us back to the smaller time frame, right? So this is the daily. On the smaller time frame, you want to look at maybe the 3 minutes or the 5 minutes. Let's look at the 5 minutes, for example. So this is how AMD looks on the 5-minute play. So AMD on the 5 minutes, you can see that it's ran up, came back down, pulled back, came back to this point. So on the big time frame, which is here, I draw my hard lines. I call them hard lines because those are like significant areas of support and resistance for me. On the smaller time frame, I draw my soft lines, which are places that it might push back, but I expect it to still break, right? It might push back a little bit, but I expect it to still break. So on those ones, I'll use maybe another color just to show you what I'm looking at. So look at this one, for example, you know that it came down here and pulled back. So let's make that blue. This is a soft line for me, right? It's very close to the main one, but I still expect that it still has 0.12 to get before it gets to the main one. So I'm not surprised it got rejected here because that's close enough. Now you can call this place a zone, right? You can call this whole place a zone because price is struggling to get into this resistance zone at this point. So this is a zone for you. You could also look at somewhere here and put one here. You come here as well. These are just soft, like I call them soft lines. You just put on your chart, right? Now, what this allows me to do is not to panic when I'm seeing a move go up or go down. This is for, I really call this my mental health lines, to be honest. That's how I describe it, that this is for my mental health. What do I mean by that? I could see all these things happening like this, right? I could see this going on like this. And I could panic that, oh my God, it's dropping from 90 to 91, or it's dropping and everything, and I'm seeing red candles. And it's making me panicked. But then when I come back to the daily, and I want to show you guys something. You see all those lines I drew? This is it. Meaning everything happening here is still within my zone. So I'm not yet, it's not even gotten down to my support yet. Even though you've seen all this red and everything, it's not gotten down to a point that I should be panicked, especially if I have time on my contract. Now, if this comes down and breaks this line, which was my support line, I'm getting out. But I am not getting out yet because all this pullback here is still within my zone of interest. So if I look at it and I'm saying I'm willing to lose, I'm not, my support is at 91.43, and that's 12%. I might say, okay, the most I'm willing to go is 15%. 15% might be, 15 times, let's say 90 or thereabout, that's 1350 or there, something that you subtract that from. So that's like, maybe it's something I can't remember, something like that. My numbers are off. In my head, I'm like, if price gets below 85 or 83 or whatever, I mean, I'm just pulling out numbers here. But in my head, I already know that this is my stop loss. So even if I'm seeing all this, I'm fine with it. Not because I like it, but because it hasn't met my area of concern. My area of concern is below here. This is my area of concern. That's where it bothers me. So everything happening here is price just moving up within an area that I am already aware of. So you won't see me cutting my play here because I already know that it's there. Based on there was support here, there was resistance here, price is going to struggle a little bit here before it breaks out. So anything happening around here, as long as I have time on it, I'm fine on it. If it was a day trade, completely different equation. If it's happening if it's a trade I got in the morning, I want to get in the afternoon or at the end of the day, completely different equation. If it's a day if it's a play I have like 2 or 3 more days on, or another day, whatever, that's a different equation altogether. But let's just say this was a play I take on Monday for AMD, and I'm hoping that it runs up within the week. I'm not day trading it, so I'm going to let it do what it needs to do. This is what I'll be watching, this zone you see here. So all my attention will be on this zone because I need to see what happens. Does it break out? Does it stick it? Sorry, let me just say, I'm saying, it's just for entry. Okay. So should I use mental stop? Sorry, that. for every for entry, do you wait for the candle to close above the level or just to cross the level? Nah, I definitely wait for it to close. I don't do closing is extremely important. Just imagine price crossed here, right? It did here, it crossed it, it had another one here, and then started reversing and going back down. This is called a fake out. So you go here, even though it looked like it closed, it didn't form. So you want to see like 2 or 3 candles before you do anything. Look at it, 1 cross, 2 here, 3 started coming back down. Somebody would have bought here and bought a $95 strike, and then price fell all the way to 91. You've already lost money there. So waiting for it to confirm is important. Now, what happens is you'll probably pay more. You'll see a contract go from $100 to $130. You're like, my God, the cost of the contract is going up more. But guess what you're doing? You're paying for patience, because someone that got in at that $100 might end up being the person that lost all this bit here and dropped down here. So you pay 130 and then it runs down to like 70 or 80. Whereas someone that waited for it to consolidate, like you see here, it dropped here, it consolidated and started pulling back. Someone that waited for all this consolidate, because here now you can see that this support held. So you know that it has held 1, 2, 3, 4. When it starts breaking out, you know that, okay, this is a strong place. So now I can afford to get into this play. It runs from here to here. So what you're waiting for is, what you're paying for is peace of mind, confirmation that yes, it's in a good place and I know it's in a strong place. That's what the price is for. So even though you pay a little bit more for your contract, you're getting more from, you're eventually getting more from those contracts, because you've paid for peace of mind, you've paid for strength, you've paid for confirmation, right? So I'm not sure what the numbers were that you're talking about, Steph. Okay, set the price points at each level. Okay, I don't know. Okay, you guys will probably discuss something different. So this is how I play. This is what I look for when I'm, this is what I look for when I'm doing a trade. I don't just want to rush into stuff, because I realize that when I'm patient on a trade, I get the most returns for it. And do you guys want to know who actually made me focus more on my patience? And I'm going to say this and it's going to sound funny. Let me see if she's here. I think she is. Hold on. Let me see. Aisha. Is Aisha here? I think Aisha, are you here? I think she is. I saw her name earlier on, but I can't, for some reason, I can't work this now. There was a point I used to call plays and she told me something. She said, Timoni, I've noticed that your plays, when you call them out, sometimes they pull back a little bit and then they run up. She said that to me last year. I don't know if you remember, Aisha, when you said that to me sometime last year. You said, Timoni, I've noticed that your plays, when you call them out, sometimes they pull back before they take off. Yeah, she says she remembers. That thing stuck with me, because I'm like, oh, she's seeing something that I probably am not saying. So let me start observing some of the things she's saying, right? So I now started watching it, and she was right. Sometimes I started realizing that I see the play, I see everything form, but sometimes I miss something. Maybe I didn't wait for that second confirmation for it to go up, even though the play is set up to run, but I should have waited maybe 1 more minute or 5 more minutes, So that's when I now started focusing on, if you guys look at some of my plays, I say something like, don't get in until so place. Some of you will be like, but it's already running. Why don't I get in now? But I'm like, nah, hold on. There's a reason I said that. It's changed. That statement she made to me changed a lot of things in my head. So that's why I'm saying we can learn from it. I learned from Aisha on that sense, because she told me that. And I was like, yeah, she's actually saying the truth here, because I started observing, I started going back to all my plays to see what I'm doing. And she was 100% right, So if we use that strategy and we come back to this AMD play, for example, I want AMD. I want to get into AMD, right? I'm not yet in it. I just put some money aside for it for Monday, because I kind of played everything this Friday. The first thing I'm looking at AMD is, okay, this is my hard line, but AMD struggled to get past this line. right? It's holding on my 50. It's run up. So now my entry for AMD, I can either enter here, I can enter here, or I can just wait and enter here. So I've got 3 entry points for AMD. I've got here. Between here and here is a $17 move, 17 cents move. Between here and here is a 12-cent move. So that's 29-cent move. I can then decide, do I want to take a 29-cent move and risk it being rejected here to come down here? Or am I okay waiting till it gets above here? I know I'm going to pay a little bit money for that run up here, but I know that it has gotten past this area and I'm not dealing with this shit no more. And I wait for those 2 or 3 confirmations before I take it. T-Money usually waits for this point. Lots of guys will run here and say, oh, it's above the 20. It's above the VWAP, which is above here. This is the VWAP. They'll like, it's above VWAP. It's above the 20. It's above, and they'll run into a play. It gets here and it gets rejected. I don't trade like that. This is my own personal style of trading. I don't mind it running up. I don't mind the price going up a little bit more, but getting in here when I know all this is done and dusted. You know, that's how I do it. But I have all my stop losses, all my key levels drawn on my daily. And then I use this on my entry for, you know, confirmation of things I'm seeing. And then to what Young Farber and I think Gerald Sanko were talking about earlier on, if I plan to day trade, if I plan to scalp, I've got my levels already here, but I then come strictly to this timeline. And this is where I start focusing on my timeline, my 5, my 10, my 3, because I want to scalp. So when I'm scalping, all this is great. I've drawn all my lines here, is great, but my focus then becomes here because I'm like, okay, it's going to run from here to here. Maybe I'll see what it does. If it crosses this line, if it gets to here, I have 5 contracts, I'll sell 3. If it crosses here, I'll maybe sell 1 more. I'll let it run all the way up to 94. Then I'll sell 1 more and I'm out or whatever. You know, they decide to do that and they're like, I'll see how far it does within the next 10 minutes, but they have levels already here. So everything they're doing is here. Even though that, you know, that's scalping and they do it and they're done in 10 minutes and they're like, yeah, I'm done for the day. My boy, Hove, who's on this call, Hove does this like crazy. Hove comes in, he says, I want to trade between 9:30 and 10 a.m. He gets his levels on the day on his daily and he just focuses. And once he sees his lines, he's like, okay, my lines are this, 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 this. I'm going to try and make my money within here, 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 here. And it's like, yeah, it might get rejected, yes. So I'm going to sell everything here and I'm out. And I'm fine by it. He's fine. That's scalping. He does it and he goes, Hove, I know you're there. You want to just add to that? Hove, are you there? Okay, I can hear him. You know, but he does that. So that's how he wants to do. He doesn't want to be on the chat all day. Young Fab said she likes to be on the chat all day. So she trades differently. She can be on it and she can watch everything. You know, so she uses her eyes as a stop loss, right? Some other person will say, I don't have all the time for that. So what do I do? This is what do you call it? This is trading view, right? I've got this here. I'm like, okay, I'm not willing to go. This is here. I'm like, nah, I don't want to lose below 91. So I'm going to put maybe a stop loss here. This is right click, add alert. This is it. And I just come down here and I say EMD below. This is for you guys that say, oh, you're busy, you can't do all this. This is it. I just say, this is my stop loss. This is my alert. And I just put it there and the line appears there. Boom. Tomorrow on Monday, if this price drops here and gets to this point, I get a notification on my chat. It's a big alarm, big sound. It goes, AMD is below this amount. I go in there and I sell. And I'm fine. I don't have to watch it nonstop. And it's linked on my phone. I have TradingView on my phone. So the same notification I get there, I get here. So this is how I do it. And then I come here, I right click it, and I do this. No, yep, and I put AMD entry on that. Boom. and I have my alert set for AMD. So now, whatever happens, I'm fine on this chart. I could go about my usual life. You know, AMD gets here, it alerts me. Sell. If I'm already in a play, it gets here, it tells me sell. If I'm here, it tells me time to get into AMD, I get in. I'm fine. I could do everything from my phone. I get the notification here, so I know what to do. I'm making this tool work for me. It's not in control of my life. It's doing everything for me. No, you do it on your mobile. You do it on your mobile as well. You do it on your mobile. I have it on my mobile phone. I have TradingView on my mobile phone. I set up my alerts on TradingView in the morning. When you guys see me posting everything I post on IG, I'm not on my laptop at that point. I'm on my phone and I'm doing that I do those things like 4 a.m. in the morning. I'm doing everything on my phone. I'm setting all my alerts on my phone. Everything is on my phone. It's only when I come to trade with you guys in the morning that I come on my laptop. But everything I do is on my mobile phone. So it's not crazy. It's not rocket. It's simple automating your life. That's the way I describe it. So this is it for me for AMD. I'm already looking. I'm like, okay, I'll get in here. I have my price target here and all the rest, and I'm fine with it. Let's use one that I was going to look at SPY, but SPY is a beast on SPY is just going. So SPY is not the most objective stock to look at because it's just going. Let's look at Apple because I know some of us got burned by Apple. So let's look at Apple. All right, great. I can see all these lines are things I already have. I'm not drawing new lines on anything. I've done all my charting in the past. Everything is saved there. I'm not coming. If price moves up, I draw a new line. If price doesn't move up, but I can open 10 different charts for you guys and you're going to see all the lines on all those charts there because I've drawn it and I'm fine with it. I'm cool with where everything is now. So I'm fine. The hard work has been done. I'm just waiting for it to start doing what I need it to do. Now, this is Apple. If you look at Apple on Monday, if you look at Apple yesterday, Apple opened here. Is this okay? Ayo, okay, it got kicked out. Oh, if you look at Apple opened here, great spot. It ran up a little bit. So Apple had a run. Apple went from 147.60 to 148. So it becomes an issue of okay, if Apple tanked on you, it's an issue of entry and timing. When did you enter? What strike were you going for? What were you trying to get? Because Apple did run. And how do I know I would have gotten into Apple and made some money from it? I was not looking at this. I was looking at this. And I had all my lines already drawn. So I drew these lines weeks back and see what happened. Apple came yesterday and respected this. I didn't even look at Apple yesterday. You guys will know because I was on the mic with you and you saw the charts I had open. Apple was not one of them because I didn't look at Apple yesterday, but this line was already there. And guess what? Apple did what it should do. What do I mean by that? We've had the run up. We've had the pull back to support, which is here. And I'll make this black now because this is a key line. Apple pulled back to support, crossed here, got back to this point, got rejected, made a decision here, right? Had the doji, decided to go up and down. It chose up. It tried to cross again, came back down again. So Apple has tried here 1, 2, 3. Eventually, it's opened here, right? Ran up, came all the way down, bounced off this top, and came here. So it has tried it 3 times already to cross, and it eventually crossed. Now, do I like where Apple is right now? Of course I do. Would I have played Apple yesterday? I probably would, but most likely not because there were so many other tickers that were going. However, what Apple is telling me is, dude, there's money to be made. That's what Apple is saying to me. And then I'll show you why. Let's go back to the daily. Apple is telling me that there's money. Just looking at this chart, Apple is saying if I'm playing Apple for the short-term gain, then I'm missing it because Apple is telling me there is money to be made. This line, I drew this line from September last year, stopped it once, stopped it twice. Apple probably touch it again at some point here, 154, but that's another one. Now I'm looking at it to say, okay, where are we? We talk about double bottom and all the rest. You have a double bottom here. You have this is literally a double bottom. But without me drawing any line, you can see something. You're having your 20 is here, my 50 is here, my 200 is here. This is almost a confluence whereby they're all together, right? It's almost a confluence of moving averages, and then price came there. Price bounced off there. Once you see this like this and it starts moving, this is the definition of momentum, because once the confluence is there, it's like a big explosion. It goes up or it goes down. When it goes up, you just pick the move it's going and go with it, because once you have all your moving averages, be it your 5, your 9, your 21, whatever, once you have your moving averages together in a spot like this, and then they start moving in one direction, go with it, because at that point, it's made a decision that it wants to go, literally. So here, all this was good, everything here, but this part here is vital, because the moment price made the decision to bounce off the 200, cross the 20, cross the 50, and then the 20 started moving with price, this was a perfect place to get in. So you see, let me spread it. This is a great place to get in. This 15th of June was a great place to get in. Now, that was last month. It has run up, right? It has run up and done everything it needs to do. The question now becomes, what's happening now with price? I'm looking at it, I'm like, okay, it has gotten here in the past and got bounced. I'll just draw a line here. Price has moved up. It's come back down. It tested this support that we drew, and it decided to go back up again. Made a decision, moved up, and ended the day, like we said. Question now becomes, where are the key places we're looking for price to move to? If I'm not already in this play, I'm going to say I need price to cross over this line here before I get in. This is how I play. Some other guys will say, I'm okay with taking 5% profit. So I'm going to get in here, and then I'll wait for price to get here and I'll sell. And I'll take my 5 or 10% profit. Good on them. It's a personal choice. If that's what you want to do, fine. Some other guys are saying, nah, I've put in so much work and so much money, I need more than that. So I'm going to wait until I'm certain I'm going to get the returns I want. Price is not doing anything. There's no entry for me until price gets here and consolidates above here. And then once price consolidates above here, we now start saying, okay, what's my target? Which is this line you see here. I'm just going to do this here. Oh, sorry, guys. So I already know that based off on what I'm saying, there's a line here, because this is where we've touched it here once, touched it here twice. This is the third part. Price is probably going to get somewhere, and this line could cross here. I'm just drawing a line there. So already, I'm not taking it. Is at 150? Is at 148? If price crosses here, we're already at the 150 mark. Once price holds here, I'm going to take a 152, which is the medium between here and here. I'm going to take a 152 strike, but I know that my target is 154. So all these are things I'm already doing before Monday, before price moves, before anything happens. I already know that this is it. But guess what? Price could go here and get rejected, right? So if it crosses this line, I'm going to play all this way. It could go here and get rejected. So what do? I wait till it gets here, and when I see that it's getting rejected, I know that if it, there's a target for me, there's a price target for me at 152, and there's another price target for me at 150. So now I'm going to take a put when I see that it gets rejected and start coming back down, because it's going to come back somewhere here and test it again. It will go up, but it allows me to play it both ways, because now it has done the run up I want. If it gets rejected here and doesn't run up, then I know it's going to come back down here to test it. So I'm going to put a put for 152, knowing that my target is 150. That way I'm playing both sides. You know, same ticker, same move, both sides. You know, so this is what I'm looking at for Apple. So for me, I'm not touching Apple personally. You know, I could have made some money on Friday. It's not enough for me to put the stress, you know. Like I said, I put too much effort into this place for me to, you know, if it's 10% I get, sometimes I take it, but I'm not happy because I put way too much effort for it. So I'm going to pay money to get what I want. I'm going to wait for that extra confirmation to get what I want, right? That's the way I look at it. So for me, an Apple play is anything above 150 because that was the high. Apple high was 150. Anything above 150 is what I'm taking for Apple, knowing that my target is 154, but I'll be looking at 152 play. So you don't be surprised if you just see me put that out on Monday because that's what I'll be looking for. If Apple gets here and gets rejected and starts coming back down, my eventual price target, if Apple gets rejected and starts crashing these lines, I'll be looking for an Apple put for 141 because that's this line. That's where Apple has struggled a bit. So I'll be looking for a put for 141, but I know that I'll be taking profits across all these lines. So everything here is my guide. It's not emotional. It's not what do I think, is not what do I want to happen, is not, oh, why do I now? It's this is telling me what to do. So I'm trying as much as possible to remove my emotions from trading. It's impossible, but I'm trying as much as possible to limit how much my emotions determine what I do. I'm trying to let these things I'm seeing here tell me what to do. That's basically how I will trade it, or how I trade rather. Sorry, I'm seeing some comments here. Let me just look at it. Okay, can you chat Baba? But watching that file will be critical next week. Okay, perfect. So let me quickly look at Baba, right? And the reason, you know what, the reason, Samina, the reason I don't want to talk about Baba per se is Baba is not about technical analysis. Baba is about the market, what's happening, right? The Chinese government messed up their stocks. So this is where you have to separate technical analysis from outside news. News trumps everything. News is the most important thing ever, right? Your chart could tell you 1 billion things. News could come out and it could destroy every single thing your chart tells you. So Baba was one of those ones that the Chinese government came out and said, oh, they're putting out, you know, there's fear of regulations for Chinese stocks that are listed in the US stock market and all the other stocks. You know, when all that news came out, it completely trumps what you're doing. So when you see things like that, you don't go back to technical analysis. You go back to, let me get out of this shit because I don't know what's going on. This is beyond me, right? This is beyond me. It's not, it's just like the government announcing that, oh, they're going to break Apple up or something. They're going to break tech companies up or something, right? I'm not going to be looking for a call or whatever at that point. I'm like, this is negative news for tech companies. They'll probably drop down. Or maybe I'll take a put and then I'll wait and see what happens. But it's not my, at that point, it's not your call. You're not in charge. So no matter technical analysis that you're looking at, it makes zero sense because the Chinese government will mess you up. Look at Didu, is it Didi or Didu that came out the other day? They've been destroyed. They've lost 35% since they did their IPO. That was meant to be the next competition to Uber. But the Chinese government has messed them up and that stock has kept tanking 35%. Imagine you IPO 2 weeks ago or 3 weeks ago and you're down 35% because of the Chinese government. There's no technical analysis that will save you there. You know, so Baba is one of those ones. So Baba was, everything about Baba was good until the news came out. Because look at Baba here. For you guys, look how Baba was doing. Baba had dropped down here. It came up here. It held here. So now we're having lower highs, right? Which is a very positive sign. So we had a lower low and a lower high here. We had a high here. We are going to get a higher high here. And then the news came out and that went. So my technical analysis told me Baba should get here. But when the news came out, it destroyed it. And guess what? This might just be the start. Yes, it came down to somewhere on support here. So there's some form of technical analysis guide here, which is on the support side, but it means nothing because until news comes out from China, you know, on what's going on there, it's a no, it's a no go for me. That's why I think a few of you asked me about Baba, and I said personally, I'm cutting it and I'm waiting. I'm not forcing what I want. Me holding on to Baba is me forcing what I want on the stock, not what the stock is telling me. And that's not trading. Yeah, it's Diddy, yeah. Thanks, Thomas. You know, it's me forcing a trade on a stock when the stock is telling me shit, I want to go there. You know, so that's counterintuitive. So one other one I want us to look at for next week is let me see, what's this stock? I'm looking for a stock that has earnings next week. I think, does Tesla have earnings next week? Is it Tesla? Let me see. Yeah, Tesla has earnings next week. Great. Let's look at Tesla. And you guys remember, I screamed all through this week that Tesla has given us nothing, so nobody should be in Tesla. I think you guys remember I kept saying it, that Tesla is not for us this week. Let's not touch it. Except you're taking, oh yeah, except you're taking Facebook, except you're taking the puts. But I was like, Tesla has given us absolutely nothing. So don't touch it. So this was Tesla. Right? It was bad, but it's also good. What do I mean by that? This is Tesla daily here. Let me show you this first so that you can see what I'm looking at. And I keep going back and forth, so apologies guys, but you'll get used to me a little bit. If you spend more time with us, you'll see that I tend to go from one to the other because I need to see everything when I'm presenting. This is Tesla. It's actually been on a downward hill, as most of us know. Look at Google. Google is off, man. All right, we'll look at that. But look at Tesla. It's hit here, came back down, got the sign. So this is basically that H pattern when it's going down, right? You guys hear about it sometimes when it goes this way. 1, 2, 3, 4. It comes back down. The good thing about it is all this was happening within this zone here. So Tesla has been trading within this flag, if you want to call it that, right? It's been dropping, but it's been happening within that part. Now, Tesla has found support somewhere here, right? It found support here and it's slowly climbing up, slowly climbing up. Now, this is the interesting part. Tesla needed to cross this area for it. I mean, Tesla crossed here. I mean, Tesla was down here. I think we had some bad days and everything. And when you guys were trying to get in Tesla, I said, no, Tesla has not given us confirmation yet. When I talk about some 2 or 3 candles, this is what I mean. So it crossed it on one day, doesn't mean that's a good entry. If you're not scalping, except you're looking to go into Tesla for that day and get out and all the rest, there was no play for us for Tesla. So those that were scalping, that wanted to just play this move, they made money, right? 65 to maybe open 68. So they made money if you're looking to trade it for that day, but you couldn't hold Tesla till the next day, right? So for those that trade, that scalp, or open a trade in the morning and close it that same day, this was a good day for them. But if you were looking to hold Tesla till maybe Friday, maybe you got in on a Monday, which was, I believe, was it 9th? I can't remember, 19th or something. Yep, which was 19th, and you were hoping to hold it till Friday. There was no play for you for Tesla because it just wasn't there for you. Now, Tesla has done all this thing and it has crashed down here. It couldn't hold and it came back down here. So now we're like, okay, Tesla is here, it's found support, it's somewhere there. Let us see what it does next, right? We talk about cup and handle. This is cup and handle. Tesla is still, everything happening there is still within the handle zone because the cup and handle requires that the handle doesn't fall below 50% the length of the cup, which is probably somewhere here. So we're still within that zone somewhat, right? So we're not too bad. It's still dropping down. However, we know that there's a support here because Tesla has touched it 1, 2, 3. So we know Tesla has touched support 3 times. It might actually come here again. Now, this is where you wait. This is why it's important you wait. Tesla could come down here And you know what? It could actually break down. It could actually break down and drop if they have bad earnings. It could do that. Or even whatever, they could even have good earnings and it could drop, because we saw that most of us got burned by, was it Apple and Tesla the last time, with earnings and everything, and still nothing happened. So, that's one. Or it could bounce off here and move back up. It now becomes, what do you do? How do you play it? Do you then say, this is Tesla, I know this is support. So if Tesla holds on this support and starts moving back up, I'm going to take a Tesla call, but I know that there's a resistance somewhere here, there's a resistance here. So I'm not going to take anything crazy. I'm going to open a Tesla position, but I'm going to take profit once it gets to, is that 643? I'm looking for maybe a 650 or 660 contract. By now I'm going to take profit at 650 or something. That's where you make all those moves. You make all those decisions, right? So you could play Tesla intraday, make some more money and everything. You could make money all here, right? There's money here. There's money here. So this is how I'm looking at it. Say if Tesla has good earnings on, not even good earnings, because the truth of the matter between you and I is that earnings is a gamble. I'll tell you guys this. Earnings is a gamble. Some guys will make huge money on earnings. Some guys will lose money, but it's a gamble. Nobody knows what's going to do. You could have great earnings and it goes down. The other last year, last quarter, was it last year or last quarter? I can't remember. We saw companies having shitty earnings and they were running up. And Apple was the first company that had $1 trillion. I think Apple hit $1 trillion and Apple tanked. So earnings sometimes doesn't make sense. So plain earnings is a gamble. The issue now becomes, what level of risk are you taking? Are you willing to take? So on Monday, you could say, Tesla. I'm just saying Apple and Tesla. On Tesla, you could say, okay, Tesla is here. I'm willing to gamble some money on Tesla. I'm going to take a call, but I might take a call here and I'll put my stop loss here. If Tesla drops below 623, which is this line here, stop loss activated. I don't want to, get out, because you're hoping it goes up, but you're like, if it's not going up, and it's at 643, I'm not willing for it to drop below 622. I'm going to set my stop loss there. That's one way to play it, because in that sense, you're hoping it goes up. So you don't want to lose too much. You're going to put a stop loss somewhere around here and say, if Apple goes here, I'm out. I'm not going to lose all my investment in Tesla. I keep saying Apple. I'm not going to lose all my investment in Tesla. I'm going to, if it drops, I'm out. That's fine. It's fine. I'm going to lose my 10 or 20% and I'm okay with it, because you're hoping it goes up, which there's resistance here, resistance here. However, if Tesla starts going up here and you're playing all this one intraday, right? So every day it goes up, you make some money. Every day it goes up, you make some money. That's all good. The main place for money, where you're going to make money on Tesla, is when it crosses here. Crypto, can you mute it? Yeah. So all here, you can make money here. The real money maker is here. This is where the real money maker is. So all here is where it's been struggling, because this is where you call, and why it's been unable to get here is this is literally a I think it's called a support zone, right? It's a resistance zone in a way, because no, it's actually resist, because each time it gets there, the sellers are like, nah, we don't want it to get past this whole thing. And it's let's take our money, let's sell it and get our money, because we don't think it's going to get past here. So let's take our money rather and get out. So each time they do that, they sell and the price drops, right? So this is a huge resistance zone for it. However, it has been unable to get past there. The moment it decides to go there and solidify, right? So the moment it gets above this range here and solidifies, and you see those 3 candles hold here and it starts moving up, then you know that this is the run you've been waiting for. So all here, there's money here. I'm not trying to belittle how much you make here. This is money you can make, but the real money maker for you is here. It's all here. And this is where Apple wants to get to. It just hasn't been able to break all these lines. So until Apple does all these things, I mean, until Tesla does all these things, we're going to be playing all these lines here. We'll play all these lines. But once it gets over here and you have your candles here and everything solidifies above this part, and then you're like, okay, this is where those 300%, 200%, 400% returns comes into equation, because this is where it wants to run. But you're not going to get you might get all those moves here somewhat, but you have to be doing that intraday because it could easily switch on you here. So this is not a safe place to take long Tesla calls or anything, because you want to get in, get out that same day on all these trades here. When it gets into this place, you can take a swing knowing, and you see that consolidation, you can take a swing knowing that that momentum will continue for some time. That's how I look at it. That's how I look at it. That's how I play it. And that's what you saw with Google, you saw with Starbucks, you saw it with Facebook, which let's look at Facebook. This was Facebook. I think this was Facebook daily. I called Facebook here. You all remember on the 20th when Facebook was 179? Do you guys remember? We got Facebook here at 179. Right? I saw it because before I even put out that play, and everything I do, you could see all the lines are there. I'm not just coming here to chat shit. I already drew my support here. I drew my lines here. I could see the trend already. So I had my trend, I had my support, I had my price action. Facebook had done what I needed it to do. It has pulled back to a point that it found support here on my trend line. So once it found support on my trend line, I was like, okay, this looks like there's something going on here. I needed to see it close above it. It closed above that line. And I'm like, okay, I like where this is at. And I think at this point, I am happy to take a play here, knowing that Facebook could get to this point. This was my initial play I was looking at for Facebook, that Facebook could get here. And if Facebook got here, I knew it might get here and get rejected. So I played Facebook and I took my profits here, right? So I was fine with it, but I didn't make as much profit as those that held on and allowed it to keep going this way. But for me, I was fine with it because I knew what I wanted to do before I took the play. So for me, my decision was I'm going to take Facebook profit here. And I took my Facebook profit here. A few smarter people than me held on, and Facebook gave them 100 grand. Like most of you know, Facebook paid some people's, give some of their annual salary this week. I didn't get my annual salary, but I got what I played when I took Facebook. So this was how it was. It was me seeing everything, doing all the work, because what lots of you do is, and I used to do this, so it's not a slight on anyone. We used to do it, is that we don't do the homework before, and then we don't know how to react when it's happening real time. But when you've done the homework before, everything you're saying is either aligning or confirming with what you're thinking. You're not scared anymore. So I don't get scared of plays. I don't get scared of movements. I don't get scared of a pullback. I don't get scared of anything because I've done the homework to see what's happening already before it even happens. So all this for me makes sense to me. I'm looking at it, excuse me, I'm looking at it, I'm like, yeah, it's fine, it's doing what it should do. It's bouncing off, it's crossing off. Facebook on Monday might open up and we might have another candle here to test this new support. So I won't be surprised if we have a red day here on Monday. It's not going to shock me. At the same time, we might open up and jump up, but I know that this is a line for Facebook. So a stop loss for me will probably, if I'm taking a Facebook play, I'm probably setting a stop loss around here, because I don't want to put it too close that it touches it and bounce back up. So I want to give it enough time. Like really, I could put the stop loss here and say if Facebook falls to 354, I'm out. I could do that. Or I could even say, knowing Facebook, I could put Facebook at 350 and I'm okay with it because it could jump up. I know that Facebook is going to go to $400. I know that for a certain, that Facebook is going to get to $400. Will it get there this week? I don't know, but I know Facebook is getting to $400. So for me, I'm like, am I happy to lose? If I'm taking a call that expires on Friday, am I happy to lose to lose 10 bucks. I mean, drop a stop loss at 350 with the potential of it going to 385? I think I am. So I'm gonna go for that. That's the way I look at it. It's not everybody's way, but it's how I do it. You know, so if I look at Google, so this is Google. This is new territory for Google. It's never been this high before. It still wants to run, right? It still wants to run. This is where things like Fib levels becomes important, Fibonacci levels, and that's a different conversation because Fibonacci level just allows you to predict where you think it might get to. So people draw Fibs until, you know, this is where, no, sorry, not that one. No, what am I doing? Sorry, 1 second. I need you out. You know, some folks say, okay, what are the projected Fib levels for this one? You could say, okay, just give me 1 second, guys. So, yeah. So yeah, so what are the Fib levels for this? And these are my Fib levels. So, you know, at least between here and 100, you could say, okay, you could get to, you know, you could get between here and 200. You're like, okay, I'm looking at you can get to 734 to 779. You know, you have all these levels here. So now, next thing you want to do is, okay, so which one are you, you know, what's the first one you're looking at? Which would be the 2734. That's like 70 80 bucks move or something like that on Google. It's very possible that'll be your price target. You could just use this as a price target, you know, because on Friday, as crazy as that sounds, on Friday, let's look at this candle. This candle opened at 2550, closed at 2660. That was a $110 move. I'm not expecting that again on Monday, but at least this gives me some into that target because there's nothing to match it against. It has never been here before. So it's not like you could say, where was price last year or whatever? Price has never been here. So this is where you now project and anticipate. And, you know, this helps you move away from guesswork. But nobody knows. This is just a projection, you know, that somebody said helps put some science. It puts some science to your expectation, anticipation, projection, whatever. It's just some science around it. Nobody knows any of these bits. There might be some level of accuracy to it, but you'd never know. However, looking at other indicators, this is extremely positive because one, everything is pointing up. My 20, my 50, my 200, everything is pointing up. That's great. Price is heading up sharply. We're having higher highs and higher lows, like you can see here, you know, or lower highs rather and higher highs. So we're great. Everything's pointing up. My TTM is pointing extremely sharp. I think this is a 45 degrees, which is the perfect angle you want your stuff to be pointing, 45 degrees, and it's pointing that. And my MACD is crossing over, and this is the first green day we've had in our MACD. So 5 things here are telling me perfect. So if I'm looking at this play, I'm going for a call because everything is telling me perfect. Everything in this play is telling me perfect. The only reservation I have is it has never been here before. So I don't know what it's going to do, but I know that everything tells me to take a call. So I'll be looking for a call for Google if I can afford it. It's that simple. It's not, and they've got earnings on the 27th. So it's more positive than negative. Now, if it tanks, I'm like, everything told me I should take a call. I took a call, but it tanked. There was nothing I could do. It happens. But I know that I did the analysis I should take. You know, I did the analysis I should do. I was not guessworking. I did what I should do. It just didn't work out. And I'm fine with that. I'm fine with that. You know, that's the way I look at it. You should always factor in profit taking. That's, you can't take a trade and leave it, or you should always factor in profit taking. It's what it is. It's a trade. It's a trade. You're in a marketplace. People are buying and people are selling. Some guys are going to sell and say, I bought it 20, I'm going to sell 30. Some other guys will say, I'm going to keep it because I think I can get 35. Some guys will say, 18 is good for me. That gives me my cost and maybe a little profit. They'll always be selling. This is a marketplace. It's buying and selling. It's an exchange. So profit taking should be at the back of your mind, because people are going to sell. There are certain things you have no control over. People are going to sell, people are going to buy, people are going to hold. How do you bring that into the equation? So with this, lots of people have made all the money that they want to make. They're probably going to sell. This might dump. That's what I'm saying. There might be a red candle here, but does the red candle fall below here? Does it hold here? Does it fall back to, what happens? That's what I'm saying. Entry. You have to wait and see what happens. This is, I'm going to draw a line here. It's just what it is. And you can't, there are certain things you can't fight. It's what's going to happen. So with me, I'm looking at it and I'm like, okay, and it looks like I'm drawing very tight lines here, but these are like $20, $50 moves because it's Google, if not more than. So yeah, this is $8. So there's an $8 move here between this. So it's what having a line for it, because if I put it on the hourly, let me just show you. This is what those lines look like. So this is Google. So you can see I'm glad I came to the hourly because I hadn't even looked at it. Google ran up, hit resistance, look at it. So there's already a resistance point here. So that candle I was talking about will probably form on Monday. It might probably fall. It might come back down to test support around here and go back, but it's very likely that there'll be a candle somewhere around here, on Monday, which could decide to go back up, but at least we anticipate what's going to happen here. So already at the back of my mind, I do this. Right? And I'm like, this is an area of interest for me. So I'm not touching it until it either breaks out of here for a put or it breaks out of it for a call. And then if you look at it on the 15 minutes, for example, this is what it looks like. So you can see what I'm saying. Just that thing I did there is guiding what I'm doing. It's guiding what I'm doing. So if I'm not already in this call, I'm letting it run, it pulls back, whatever. But if I'm not in this call already, I'm going to wait for it to get over here. I'm going to pay more. It's going to cost me some money, but I'm like, oof, I'm out of that zone. Now I'll pay the money for it, but I know that now I'm looking at between here and this number here. And I'm fine. I'm cool with waiting for that to happen. But I already know this part. So people like Hove that got into this play on Friday, if I'd looked at this daily, I would have even, I've told you, maybe sell one, keep another one, whatever. Let's see if it gets out of here, or whatever. But, you made your money, man, and I'm proud of you. But over here, I'm seeing this area and I'm like, okay, there's a lot of decisions to be made. Either goes down, either goes above or comes down. The fact we're already having 1, 2, 3, 4 tells me that it's struggling to cross this line. So I won't be surprised to see a pullback on Google on Monday before it takes off. If it takes off, because they've got earnings as well. So this is how I interpret plays when I look at it to say, okay, what's happening and where are the key areas for me, apart from, if you're doing day trading, a lot of these things don't matter because you're just going with momentum. And once the momentum is lost, you sell and you get out. If you're scalping, if you're doing day trading, you just do momentum. But if you're looking for, if you're looking for a play like this that has earnings on the 27th, which is Tuesday, and you want to get in on Monday because you think it might run up, and if it runs up, it's going to be too expensive on the Tuesday, then you want to get in on a Monday. And because of that, you need to then decide where do you want to get in on a Monday so that you don't shoot yourself in the foot. Because I'll tell people something, earnings is a lotto, So what I try to do is I try to put some science behind earnings to say, where is the price on the chart right now before earnings, so that I know if it's looking good or not, right? I like plays that have pulled back somewhat and are looking like they want to start moving up before earnings, because then I'm like, okay, maybe new money will come and push it up because it's looking like it's properly set up right now. That's how I like to look at it. So let's look at, I think 3M. And you guys, I know we've gone way past our time. I'm sorry, guys. It's just this thing keeps, I'll be done. I'll be done in a minute. I promise you. This is 3M. They've got earnings, I think, on Monday as well. 3M is also, let me see where they used to be. Yeah, used to be way higher than that, dumped and been going sideways, not been doing too great. I'll definitely look at what's going on with news and all the rest for 3M before to see what's going on. But if I was looking at the chart for 3M, I'll be saying, and this is the daily chart, I'll say, where's 3M right now? I'm like, okay, 3M is definitely in a place it can't seem to cross, right? So this is simple analysis. I'll do this, what I always do. I'm like, this is a resistance zone, right? This is before I even do anything, I just draw that line. Okay, this is a resistance zone. It can't seem to get there. Even when it gets there, it pulls back because I see that it has happened here in the past. So this is a major resistance zone for 3M. So that's fine. So what I'm looking at is, okay, 3M is here. Where is it sitting at right now? It's sitting on support, right? And it's sitting, the 20 is below the 50, and I just look at all those bits just to give me an idea. The next thing I look at is I want price to move up. I want the 20 to cross the 50, and I want price to get into this zone. So I'm probably not going to be touching 3M until maybe it gets somewhere around here. This is how I trade. It sounds like, man, but you're letting it run so much. It's running and you're not getting in. I'm like, yeah, but it's not my play yet. I'm not there. It's not for me yet, because I need to see that what it's doing is sustainable, right? I don't just want to see it move because why is this not coming up? I don't want to just get a move now. I want to see that it's a sustainable move, something that could move. I want to see above this line. So I'm willing to sacrifice this for it to get here, knowing that if it gets here, it could also tank. So now I'm looking at to say, okay, what's the initial profit I could take? I'm like, if I get in at 204, this thing could go to 206 and tank. So I'm going to look at it. If it gets over there and gets rejected, I'm going to sell. If it drops back down here, and I'll wait. Otherwise, I could also say, I'm not touching 3M until it crosses this line. And then I get in. I have two options now. I have two options for the trade. It's already at the back of my mind. I know. I decide which one I want. At the same time, I'm like, 3M where it's at now, it could also decide to tank. So maybe if it starts dropping, I'm going to wait here. And once 3M crosses here, I probably might take a put. 3M crosses 198, I might take a put, knowing that it could drop down here. I don't even like this line, so I could even just take this out. I'll take a put here at this line over here. I'll wait for it to cross, and it's here. I'll wait for it to cross here. Maybe extra confirmation. I'll wait for it to cross. And once it crosses here, I'm taking the put, because I know if it crosses this line, it's coming all the way probably down here and other lines below. So for me, having this on my stuff allows me to say, this is where the chart is saying, right? So I know that with earnings, right? And if I was to play this for earnings now, I am most likely going to take a call for 3M. Most likely going to take a call because this is support. It has held on this support for some time, right? You can see all this whole thing has been holding around here for some time. The 20 is bending upwards, like it wants to go. It's, the price is moving up a little bit. It's not yet gone off yet, but I'm saying if positive news comes out, it's likely going to push this thing up. So I have more chances of making money from a call than making money from a put on 3M, based on probability, based on chances. because it's on support. It's there. It's almost, I call it like a foundation. We have a foundation here now that has held, right? If it was still looking like this, I won't be talking about a call. But because it has gone here and held, and we have all this here, I'm like, okay, there's a foundation here. Any little any good news that comes up might give it the much a bump. It needs to go up. So I'll be looking at 3M and saying, okay, let me see what the news, let me see what analysts are projecting about it. Let me see what's out there about 3M. Let me see what people are saying about it. Is there any price update? Is there anything about 3M? All this what's that straddle? No, no, no. I go everywhere. I check all the news. I see everything to see what's there for 3M. And once I get all those external news for 3M that either confirms or what I'm thinking about, I'm like, okay, good. Now let's take the play. Let's take the 3M play. So for me, without seeing all those news, I'm thinking more calls. If I read the news and there's lots of negative news about 3M, then I'm probably looking at puts. But without that additional information, my first thought is 3M has found support here and it's likely going to go up. So I'll be looking for a put for 3M. I'm not looking for anything over ambitious. Is at 200. I'll be looking at maybe a 202 call, but I'm targeting 204. And it crosses 204, I'm letting it run all the way. This is where your runners become important because I've taken all my profit at probably 202 or 204, and then I let it keep running. If it wants to go all the way up to the moon, fine. If it wants to start dropping down, I'm like, okay, I'm not going to let it drop below 20%, and I take my profits and I go. But this is me deciding my play before even Monday. So when we talk about plan your trade and trade your plan, that's everything we've just done here. I already have my plan for how I'm going to do this trade. Before price, before the news, before the earnings report, before anything, I already have my plan laid out on what I want to do with 3M. So I am not scared of the market. I am playing what I wanted to do based on what the market told me was going to give to me. That's how I interpret it. That's how I do it. So it's one of those ones that I never, it's might not be how everybody trades. It might not be how everybody trades, but it works for me because it allows me to, overcome some of the initial things that the problems I was having as a new trader. I was scared. Any little dip, I reacted to it. Every little thing, it scared me. I was always saying that 5% is good for me. I'm fine with it. But I'm like, at some point, there has to be a growth between, I can't be the same trader that was okay with 5% all the time. There has to be a growth between me knowing what I knew that gave me 5% and me knowing what I knew that will give me 20%. So how do I then move from 5% to 20%? What are the kind of things I know or I see? And that's where all these things starts coming into effect. The more you practice and the more you do things, the more confidence it gives you. And sometimes that confidence comes with having to lose some money. You might lose 10%, 20% of your money, but it's because you're testing strategies. You're testing things that you believe. You want to confirm whether it's working or not. That's how I see all these things. So for me, and I know we're way past time, apologies guys, but for me, that's how I like to trade. That's how I like to trade. And I think it's saved me some money. It's made me more profitable than I used to be. I've made some silly mistakes. Oh, and sorry, just before we go, this is cat, right? Just before we go, this is cat. Cat has crashed. Cat has earnings on Friday, right? Let me just use this last one as an example before we go. Cat has crashed. Dumped, dump, 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 dump. Has earnings on Friday. Fell to the 200, and it's making a reversal now. Guess what I'm seeing? I'm seeing an opportunity here. That's what I'm seeing for cat. Personally, I'm seeing an opportunity because now I'm like, cat has dropped. It's done whatever bad news wanted to do. It's done it. It's which is fine. Now it's a place that I needed to cross back into this zone. And these are all lines I drew in the past. I'm surprised they're still there, but these are all lines I drew in the past. I've not looked at cat. So now I'm like, cat crosses above here, and I'm taking a call. straight up, easy. I'm not thinking about it. I'm taking a call for cat. This is 214. I'm probably taking a 216 call, knowing that cat could cross here. And then one cat crosses this part, I'm probably going to take my profits, get another call for here. And once cat crosses this part, then I know that we're in money because cat is going to try and come back to somewhere around here. This is how you look at it. So I already have 3 plays for cat at the back of my mind. I'm anticipating 3 moves for cat. Move 1, move 2, move 3. If you know, based on where it is. And I think personally, if cat opens on Monday and I see cat moving around here, I'm taking a call for cat because I know it's going to go that way because it has found support. It's bounced off the 200, which is a very strong resistance point, and it's making slow movements upwards. I'm going to be looking at a call for cat if it holds above here. If cat crushes below the 200, I'm taking a put big time because this is a major place, and if cat can, if it crashes below it, then it has no hope for a while. It's going to keep going down, and then I'm not touching it until I see what happens on earnings. And if I have to, gamble on that, if I have to, take a risk on that Friday morning, I will. But the whole week, I'll be watching it to see what it's doing, because right now it could drop down here. If it crosses below this part, then we're looking at here. No, that's one. Let me show you something. This is how funny it goes. You've got here. Look at it. That was where it stopped here. So this is a strong support zone for it. And then you've got here as well. So if cat doesn't hold here and it crosses down here, it's coming all the way to 182. So either way, there's money to be made on this play. As crazy as it sounds, either way, there's lots of money to be made because it's at 209. If it crashes, it's coming all the way down. There's money to be made here. And guess what? If it decides to start moving up and crosses this line here and crosses this line here, there's money to be made. So I am not going to rush a move that I know can make me 5 times what I'm waiting, what I would have gotten if I made a harsh decision. I would be patient. I would be calm. I would watch. I would let it do what it wants to do, and then I will go with whatever decision it makes. I will be patient, and I'm stressing that word. I'll be patient with the stock to do what it wants to do, because I'm not going to tell it what to do. I'll let it tell me what it wants to do. Here is a massive key point for me. This part is a massive point as well. This 200 line here. That's a massive line, but this one here is the one that I'm like, if it crosses this line, then I know we're going from 199 to 182 or that area. So I'm going to be patient to see what it does. If it decides to reverse as it's trying to hold here, because I think it's reversing a little bit. If it holds here and goes up above here, there's a call for this strike. If it goes up and crosses here, there's a call for this strike. If it goes past here, then we're looking at somewhere here. So there's money to be made both ways. So I'm fine with this one. I'm just going to wait and see what I get on Monday. And I'll take my time. I'm not going to rush it. I'll let the first hour of the day go. Whatever it's doing that first hour of the day, I'm not rushing in. I'm not getting in. I'll just chill and I'll see what it does. And whatever it gives to me, I'm fine with it. I'll take it. Because this, and for you to even see how this looks more, this is what has happened. It's run up, it's pulled all the way back, and it's come down to support to 200, which is a massive, massive line support zone. Now that it's on that 200, we expect it to move up. It might not shoot up exactly, but if it holds here, this is what we say some areas are key decision areas. This is a massive decision area for this strike, for this price, this area. It's massive. So if it holds there, if it holds here, anything here is a vital carry. If it drops below it, it's going down. If it crosses above it, it's likely going up. And if you want to see what that looks like on the weekly, this is it. Just like clockwork. This is it. So this is what you're seeing here on the weekly. Everything is happening in here. A decision has to be made. If it can break out, if it breaks out here, it's like, yeah, I've tried my best. I couldn't, it's got this line, it's got this line. I'm going down. If it breaks up here, it's like, I think I've done everything I want to do. I need to bounce now. And this is it. So this is what separates a 10% profit from 100% profit. It's what you do here, the mental, that waiting, that patience. That's what gives you the 100% returns, and not the 5% returns. That's what happens here. I know that I know I've spoken a lot, guys, and I know it was, like I said, it was meant to be an hour, 30 minutes. I didn't know that was what was scheduled for this. J House was what told me it was an hour and 30 minutes. I thought at least 2 hours, and I've gone past 2 hours. So apologies, guys, but um, I'm hoping this helps somewhat, because you can see that all I have done here is prepared for the play, both sides. Whichever way it wants to go, I take it. I could easily tell you guys it drops here, your price target is this. I mean, I could put a play out and say cut, call. I put all these lines here. 204, I'll put this one down, and I'll put it there, and I put it out there. I could do that. Not everybody is experienced enough to know what direction to take. That's why I usually just put one call, one play, either a call or a put. If you guys want me to be putting both sides, I could be doing both sides, because I have it on my chart. I could tell you put is this, call is this. If it breaks here, go here. If it breaks here, go there. I could do all that. But I know many people just want to know what we're looking at. That's why I just put either the call or the put. It hits, fine, we're great. It doesn't hit, we'll find out why it doesn't hit. But at least we do the analysis enough to know what we're looking for, or what we're looking at, which is what you see here. So these are just some plays that we have next week. I think these are some, Cat also has earnings on Friday. Next week we have Cat, we have Exxon, ABBV. I've not touched banks. You guys notice I've not touched banks, even though there's been lots of stuff going on with banks. I've personally not touched banks because I've been unable to nail banks. It's not been my strongest suit. I've always failed with banks, so I've just been avoiding them. But this is one that I like. I'm biased with Microsoft. I think it should, yeah, you get, yeah, you can add it to some of your watch. I also want you to have it for your personal watch list as well, crypto, because I want you guys to like be having some of these bits and saying, yeah, this is what I have on my watch list, you know, because this is Microsoft. Microsoft has been on its tear, and I still think it's gonna go more, but I'm very biased. I like Microsoft a lot. It's one of my favorite tickers. And I think it's on the MACD. This is just the first green day on the MACD. So there's still potential. Sharp 45 degrees pointing on the TTM squeeze. I love that. Earnings on Tuesday is at support, is at resistance now. If it breaks down here, I think it could get some more. So I'm very biased. I think this is where I can be very, I'm very biased with it. On the other side, though, I also know that I'm having lower highs here and I'm having higher highs here, right? So I like what's going on with this one, because if you look at what I mean by higher highs and lower highs, and this is the last one, guys, I promise. Let's just do this, and then you guys can quickly ask me a few questions before we go. So it's not perfect, but you know what I mean. Let's just take it as a zone. You've got here is higher than here is higher than here, so it's on a trend, an upward trend. Here is higher than here, so we've got that movement already. At the same time, every time stock moves, it comes back to test it to say, are we still good to go? That's what happened here. It ran up, came back to test it. Are we still good to go? Yeah, it said, yeah, we're good to go. It went a little bit, went up, came back down. It's ran up, it's come back again to test. Are we still good to go? That's what's happened here. So I wouldn't be surprised if this comes back a little bit to test, comes down a little bit again to test it on Monday before it goes back again. So I'm gonna watch it, but I'm already in Microsoft. I'm in the Microsoft 290 call. I think Microsoft, the 280 call went from, was it 150 to 960 or something? People have already made over almost 800% on that play, or if not more than, because I know Tommy was tracking it, and Tommy was like, "This is insane. This keeps going." And we went from Microsoft was about 270 or 273 or some. We took a 280 call, it blew past it. We took a 290 call, and Microsoft is at 280. It got up to 289.99, and the 290 call is for next week, right? Earnings, and it got up to 289.99 and it ended at 289.67. And Microsoft had price upgrades. So we didn't just play the price upgrade for Microsoft. We played we played what the chart was saying to us. The price upgrade was an additional thing for us to get into that play. It wasn't the sole reason we got into the play. The sole reason we got into the play was what Microsoft was looking like already. So with this one, I'm very biased because I think I want it to run. I think it's gonna run, and the chart tells me it's gonna go. Do I expect it to pull back a little bit? Yes, but I also think HD, how HD ran for months or for a period of time before it slowed down and everything. Microsoft might do that because it's got all the momentum. It's got the good news. It's getting the contract. It's going into new terrain. It's getting everything. So for me, there is no reason not to believe Microsoft is a play that would shoot. Now, if it tanks, we did everything we should do, all the analysis, all the information. We have everything and it still tanked. That's not our fault. That's not our fault. We did what we should do, and Microsoft didn't do what Microsoft decided what it wanted to do, and we're fine with that. It's not a bad thing, but at least we did our homework, you know. So yeah, guys. So this is just, I just touched up Microsoft because I know most of us are in that play. Most of us swung Microsoft till next week. I'm in a couple of Microsoft plays myself, so I'm excited about this one, and I'm hoping it does what I want it to do. Um, so guys, I know this is 2:15, and we've gone way past our time. So I just want to see if we can use maybe the last 15 minutes just to answer the last few questions that you guys have before we go, because I've taken all your afternoon and I really, really, really appreciate you guys spending today with me. But I want to see if you've got any questions you know, before we go. And feel free to jump on the mic, guys, or type your questions. Any questions at all? Let's talk about before you go, based on everything we've just gone through so far. Can you guys hear me at all? Oh, it says we can't unmute. Um,
I got it now.
Okay.
I see.
All right.
So trading view is what you use primarily to chart, right? You don't trade, or can you trade on there?
I don't trade on TradingView. I just chat with it.
Okay.
Yeah, it's just for chatting. That's all. Okay. And some people use their different types. One must not use this. There's several people use their brokerage apps and everything, and I use Webull as well. I use I just use all this stuff. But TradingView is the one I use on a day-by-day basis. Okay. All right.
Yeah, because I got trading view, but I also got TOS.
Okay. And now to that point, guys, and this is where we talk about simplifying your trading. Lots of people swear by TOS that it works magic for them, and it does work magic for them. The key thing is, does it work magic for you? This is where I keep saying everything has to be personalized to the point that you simplify your trading. I've tried TOS multiple times. It's a wonderful app. It just doesn't work for me. And
Gotcha.
I said, I'm not going to force something that doesn't work for me. I'm going to take a simple thing that I can simplify my trading and get it done for me. TradingView does that for me. Webull does it for me. I know people like S Dot and JCat, they are magicians with TOS. Those guys do magic with TOS. I've tried it multiple times. It just complicates my trading. For me to be a successful trader, trading should be easy for you. So for me, it wasn't easy. I spent more time learning the tool than watching my trade. It took away my eyes from the trade and I was focused on the tool.
Right.
The tool should support what I trade. I shouldn't, it shouldn't replace what I trade, in my opinion. They have it figured out to a point that it works for them. It supports their trade. I've not figured it out to a point it supports my trade, so I left it alone. So every individual should find which one works for them. I know some people use E-Trade. I know some guys that love E-Trade app. Some guys love other apps. The only one I know most people don't use is Robinhood because of its the lines. They don't. I know, but most people will tell you E-Trade, Webull. Find what works for you. Right? Make it easy because it's hard enough making money. You don't want to make the tool you use be take all your time as well. In my opinion. So simplifying trade is a lot of trading itself. You know, a few other people
Mhm.
tell you that they don't use more than three indicators on their screen, and I agree with them. You know, like you guys probably know about the strat. The strat uses zero indicator. All they use is price, action, support and resistance. People that trade the strat don't use any indicator. They just use support and resistance lines and stuff, and maybe one or two indicators here and there, but nothing major. So it's just simplify it to a point that it's easy for you to make sense of what you're looking at.
I got
And
another question.
sure,
I think this is my last question.
no worries.
Um, so when you say like when you call out the plays, right?
Hmm.
Like I get an alert and they be like, all right, well, let me go look at this play. Let's just say you call the Facebook so and so call for, price target is 123.
Mm.
It could be a minute or two that from the time I get the alert to the time I go look at the play, it didn't already ran
Hmm.
10, 15 cents more. So how should a person approach that?
So if and this is me, this is personal to me, guys. If I put out a play that is at one, I put out a play that is going for $50, and this is just a very subjective way to deal with it, in my opinion. I put out a play that is going for $50. It's uh something strike. Maybe a play the price is at $12 now. I put out a 13.50 or $14 strike for $50, and it was going for $10 when I put out that stuff, and now it's at $11. In my head, I'm thinking the maximum I'm willing to pay is 10% above or 5% above what was called. There's no science to it. There's nothing. It's just a personal choice, right?
Mm-hmm.
So if someone calls a play for 180, I'm in my head, I'm like, it's 180. It's a lot, but if it's 180, maybe the most I can pay for this thing is maybe 190 or something, right? It's
Mm-hmm.
just, and as I said, there's no science to it because the fact I called it at 180 and it's already at 190 tells me that it's moving very fast, which tells me that there's momentum behind it,
Right.
right? So for me, I'm like, do I want to lose? Do I want to? And this is how I just think. I'm like, do I miss that? Do I say no because of that $10 for a run that could give me $100 and give and pay back for that extra $10 I paid for it? That's the way I look at it. But it starts with you
Mm-hmm.
deciding how much more are you willing to put on any call out? Are you willing to go 10% above a call out, 5% above a call out? You have to make that call yourself, you
Because
know?
sometimes like I would take a play and I would set my limit at what you said get in. And even though it might be above that, sometimes it draws back and then it feels me.
That's another approach. Like Aisha said something, and I'm sure maybe she still practices. Maybe sometimes when I put out a call, she goes below what I call it because, you know, I, and I'm still trying to perfect my call outs because sometimes it runs up, pulls back to test the support, and goes again. Sometimes I call it that first time it runs. Now I'm trying to wait till when it pulls back to test the support before it goes, so that you don't have to deal with that pullback anymore. So I'm still trying to perfect that side. That's one area that I still have some work to do, and I'm trying to perfect it. But either way, the whole idea was when I called it out, I expected it to run. It either runs. I expect it to either run directly or run, pull back, and run again. Either way, the end goal for me was that it was to run. Now, if it runs, then what I did was right. If it drops, then I'm cutting it and saying, okay, I got I got my entry wrong. I'll find another entry for this same play. If
Right.
it pulls back 20% or whatever. So I can't help that part whereby if it's running, I can't help it because look at CMG, for example. I called CMG at I think 485 and I put it there. I wrote it on IG, I put it on the I called it at 485. And I'm not saying this to diss anyone. CMG was at 510 and someone said it has run up, it's gone up too much, I can't take it anymore. And I'm like, nah, this thing has potential to go. The person was like, it's already ran up 510. CMG ran up to I think 8,088 something.
Mm-hmm.
So you didn't put $30, but you lost out on 8,500, $8,400.
Mm-hmm.
That's what I'm saying. So sometimes it's one of those decisions you have to make to say, I'm happy to put 10% above. I mean, I'm happy that if it runs above 10% or 5%, that's the most I'm willing to pay. But have a decision, make a decision, make a call yourself, saying, Money put it at 150 is at 165. I either want it or I don't want it, make a call. But for me, I'm like, if you look at the call, it's like Facebook, for example. I'm already telling you that I expect Microsoft to run up. If I give you a Microsoft call and it's going for 350 and Microsoft runs up to 370, are you not going to take Microsoft even though you know that we're looking at Microsoft going above 300? See where I'm
Mm.
coming from? You're not
Yeah,
going
I
to take
got you.
Microsoft. Exactly. You know, or Google or any of those places that we know that when it runs like crazy. So you're not going to put 50, $30 extra because of it's moved a little bit above what I called it. That's how I look at it. I'm not saying you should throw money at plays that are running. I'm like, look at the play, look at the kind of ticker it is, look at what it might do, and then decide if it's worth it. If it's not worth it, if it doesn't fit your pocket, don't do it. Everybody's pocket is different, but if it does fit into your pocket, then I think um I don't see why you shouldn't be looking at it. But that's Timoney's opinion. It means nothing, you know.
Gotcha.
Yeah, it means nothing.
I got you, bro. I appreciate you, man.
No worries, man. Any other questions before we go? I know we've got 5 more minutes. I want to just make sure that people get in whatever they want to ask before we go, because it's not every day you get people gathered in a room like this. So I appreciate you guys coming in, but I want to make sure that any questions you have are addressed. And if we got nothing, then we'll hopefully this was what you guys time. It was what you guys tapping in with me this afternoon, and appreciate you guys. You guys are the best. You guys are making Gold Rush what it is. We're nothing without you guys. Um, you're supporting us. I saw a lot of support recently on IG. Guys were, you know, people were retweeting this class, posting it, talking about stuff. We appreciate that. We're nothing without you guys. I can sit down in my house and trade by myself and make all this shit by myself, but it's no fun when you don't do it with people. It's one person. They say you can go so far by yourself, but you can go way further with other people. And I think we as a group, we're going somewhere. We're going somewhere. Gold Rush is gonna become something really big because the members are gonna become something really big. So I appreciate you guys. This is amazing, and I know we've got class tomorrow. We'll touch a few of this again tomorrow, but You guys, thank you so much. Enjoy the rest of your day, and I'm hoping I could help you guys today. So thanks everyone, and talk to you guys soon.
Great job, T. That was really good.
All right. Thanks, buddy.